Good morning. Good morning. 9:34. Market just opened 4 minutes ago. We're going to be streaming stocks, options, futures trading. Thank you for being here. Hope you had a good evening and good morning so far. Let me get set up here. Getting a little bit of a late start. Fortune favors the bold. Good morning to you guys. Market opened 10 minutes ago. Spies just up a bit. Big day this week. GME's up almost 1%. AMC down 1.5. If you're gonna pull back to retest these levels. SMX is ripping 97%. Got a rally yesterday. After hours, it kept going. Free market's going more. We've traded before. Don't know what's going on with that. I know it's up 11. Open doors up 6.5. Rad's up a little bit. Fubo. Unity. Rad's chart's actually starting to look kind of nice. No lie. There's the break of that channel I just drew. Overstock's up. Green's up a little bit. Square, AI, ACB. GME is up 1.3.5. See, so it's above that support. That resistance, 1540. If it holds above there, then we're looking for a break of these resistances. See, bouncing there a little bit. Basically flat. That on open 982. See a little or retrace. Let me put a line. This high, what, 931? Maybe it found support there. Not yet. Young's even catching a little bit, up 2.25. Dish is up 2. Me up 1.5. Runs up 3.5. Not a bad bounce. Space is up 5.25. Teladoc up 0.32. There's 7% on rad. Weed stocks are rallying also. Open door 6.5. Tupperware 6.5. A lot of these have just gotten wrecked the last couple weeks are starting to see a little life. Half on GME. I just chop it around since this morning, since open. Still a little bit green on the day. Runs up 4% now. Plug power up 6.25. Yeah, all these have just gotten wrecked. Getting bounced. Good morning, Bubba. In it with the puts. 432, 75 cents. Alright. Alright. Thanks, guys, for your likes. I wasn't here right at the bell. Got 4 likes this morning. We're on it. 2% there on GME. AMC is now green, 10 bucks. 2% on there. 2.25. 2.5. Yeah, AMC's waking up some. GME also 2%. Two and a half on GME. AMC 2.5 as well. Morning gets. Open doors up 8, 9. Percent bounce on Tupperware. Didn't quite fill that gap yet. GNS, look at that thing go. 7.5. Wow. I really realized yesterday it made that nice bull flag. Nice green day for GNS. Still trotting along on this channel pretty well. And AI has actually come down quite a bit. But we're too far to the money. New high there on SPY. Top of the channel. Breaking out of that channel. Bullish. Rip on SPY. Oh, that's a little squeezy. Wow. Guess taking the break to the upside could have been a play. Almost 3% there on AMC. Over $10. Door almost 10%. Yes is up. SPY still going. Wow. Gonna start filling that gap. Second guess myself on the break into this channel. Eight and a half % on space. Today there's not. The wholesale inventory is at 10. Wow, that's maybe what caused us to start rallying. I was right at 10. That's so far off of expectations. Check. No, it hit right at forecast. It's weird. Wasn't from that. base is up 10%. Pretty good bounce on there. GNS 8.5. Open doors got 10%. GC. See if we break this channel, I might grab some puts. But market's pretty bullish. Puts, it would probably just be for some retracement before further rallying. Missed this entry right here. 0.3% on GME. AMC 2.3. New high there on SPY. $2.8% on GME. Almost back to 16 bucks. New high there on SPY. One of these resistances causes some hang up. Our side divergence is definitely still there though. It was kind of the beginning of this. Bought a lot of GME. Are you out of GNS? Ace? Fully out of that? Where'd you scale? There's 3% on GME. SPY new high as well. Stop loss GME. Nice. Nice to 24 bucks. %10 on space. All these have just gotten wrecked. Finally catching a bounce. Well, a little disappointed I didn't grab that trade, but oh wait, still very early. Got 45 minutes from open. $434.79. This area looks like next good resistance. Start scaling it puts a little bit just for a pullback. I think we'll probably keep going up, but got some here. If we break this channel, get some more. Just to give me some trades in the interim while we wait for it to build some bullish liquidity. But it's possible it just does this again. It's a flag, so gotta be careful. Yeah, actually, it hasn't even started tapering. It's probably not a good idea. %3.5% on GME. That first resistance. You had a good exit on it. Just that's the value of scaling. You don't have to fix less of the weight on you timing the market perfectly. So sometimes it comes down and then you get your average a little lower, but Goes up. Tupperware 22%. AMC only 1.8. Tupperware's ripping. I think it's just all the small caps and those have gotten beaten down. Maybe rallying with it. Well, it's much more than that. They did have their they did have some live stream the other day though. I don't know what he said on there. I don't know if that was partially the catalyst, but yeah, I'm not sure. Nice smooth trend though. Base 11.25. This is up 9. Smaller gains is the way because it's gains. Yeah. Always another trade, always another stock, always another day to make more. Don't have to make retirement money on one single play. Beyond up 7.8. Yeah, these are a lot of these ones have been getting wrecked. Still way down. A little bounce off the bottom. Confluence up 4.8. Peloton up 4.8. Celsius almost 5%. New high on SPY. Your account probably is reflected better with those smaller gains. Maybe a channel break here. And break. GME 4.35. Busting through that first resistance. Good volume this morning on it as well. 0.85 on AMC. Reaching for the stars, yep. %, on space. Yeah, I can't believe how many flights they've done. They've done one a month. I think we watched the second one. 4th mission. 5th space flight in 5 months. That's pretty impressive. They've ramped up so quickly. It's what? What are they making a flight? I can't remember. If it's like 3 million. Close that put. Let's see. Might jump back in it actually there. There. I think it's 750,000 a person and they have 4 seats, is that right? I mean, they're gonna have to do a ton of flights to get rid of their debt, but it's a good start and they have no competition. Oh snap, Groupon. Down 23%. They're offering? What is it? Groupon amends statement of acquisition of beneficial ownership by individuals? That's not it. What's the news? That's terrific. I sell my put. Just in time. High breaking up there, new high. Another bull flag breakout. Yeah, I'm following barbecue for sure. I'm trying to buy shares. No one will sell me any shares. It's pretty messed up. All these people preaching about they don't want payment for order flow, they don't want algos, they don't want high frequency trading. They want a more raw market. Well, to have a more raw market, you gotta sell shares. And you know, if no one provides liquidity, then we need payment for order flow for that liquidity. Yeah, Pulte, he's doing he's clearly stated he's not involved with barbecue, so I don't know why people think he is. The inviting them all out there was nice. He's growing his audience. I mean, he does philanthropy. That was a philanthropic endeavor. I mean, it was like Make-A-Wish, basically. Not to say he didn't have a good time with those guys or whatever, but he made it very clear it has nothing to do with barbecue. Aloha Maui. Well, yeah, they. I know. That was that's what they were thinking. Let me get some more puts here. That's what they were thinking the first time. I remember when Pulte came onto the scene. I'm sure you do too. Everyone just started like worshiping him. Like just starstruck with someone that has money. It was kind of pathetic. And I was like, I didn't have an issue with it. I'm like, yeah, it's great. It's great. He's supporting GME, and then he's buying shares, and and then he said at like the position that he had, and that's where I was like, hold on there. I think even by his second like averaging or whatever, I think I still had more shares at the time than he did. Just me. I'm like, dude, you're a billionaire. So it was I remember I was like, dude, like I wasn't very happy that he was even sharing the position size. It was insulting. Like it's fine to just say you own some, but why share such a small size? It's like it made us look pretty stupid. Like percentage wise of his net worth was, I don't even know what fraction of a percent. Got some puts there. We do have kind of a little tapering top. So looking for a break. But no, I think he's a nice guy and he's done great work, and you have to take people at their word unless there's reason to believe otherwise. I don't think he's a liar. Okay, grab some more.
Let's get nuts!
Get nuts. Maui Sam. Oh boy, thanks man. Thanks for generosity. My Sam says better to give with warm hands before you don't have it to give. Alright, yep. Many blessings to you and your family, good health and prosperity, and not just the kind that jingles. Thanks Maui Sam, appreciate it man. I was truly touched to hear your story the other day. Sure everyone was. Appreciate it, buddy. Better to give with warm hands and before you don't have it to give. Absolutely. Wasn't doing your family. Appreciate it, Maui. That's very generous of you. Alright, now I took care of me. I'm done for the day. Don't need to trade anymore. I'm gonna cut off the stream and go sit by the pool. How's your was it, did you have like a sailing buddy in wherever you were, Ohio? How's he doing? Oh boy, taper has broken. That's not good. Wherever you are, whatever Great Lakes you're on, I can't remember. AMC 4 1/4. I know, I'm kidding. I'm gonna keep working. On the boat, cold. Yeah, I bet it's cold today. I bet. Cold front all over the place. Bubba, cold, sweaty hands. It's maybe still respecting it. On AMC. Same with GME 4.5. Space up 13. Runs up almost 10. Lake Erie, that's right. That must be cold. Too high there on SPY. Still rolling over to some extent. That's up 0.75. Wow. No, it's not done. It's not rolling over yet. The volume right there. Well, 438 gap by 12? I don't think so. No. Maybe this afternoon. It needs to pull back for more liquidity to fill that gap. That's my take at least. Maybe a, you know, maybe a pullback to here or here. Gonna make it up there today. Are the seas big on Lake Erie? I've seen and heard about the huge waves, like just crazy gnarly chop. There's a red candle. Even so that it sinks big cargo ships, which is crazy. I think they go through Erie, don't they? That's where the canal and stuff is, so yeah, they must. Tarzan call out to the Ape Nation. I'm gonna add some puts here if we break that other channel. I actually did just break that channel. Oh, now this tapering channel I have to break. Okay. Nice little head and shoulders up here. I'll add. Yeah, no, it's not big waves like Maui. It's in like big like lake chop, just super short interval and just crazy. And if it's enough to sink those cargo ships, that's wild. Yeah, what's Child's name? Yehi? Is that where it is? One little head and shoulders. Still need to break this rolling over channel still. I got some more. Here we go. Bubblicious makes you smile just to read it. Consumer inflation in 15 minutes? Ooh, let's see. Wait, what? Oh yeah, 11 o'clock. Consumer inflation expectations. Huh. That typically isn't much of a market mover. Yeah, VWAP's pretty high actually. Nice, another Head and Shoulders being built here. %, on space. It's got a ways to go, man. It really started selling off once they started having their flights, successful flights. Like, oh, it's kind of a viable business now. Dump it. Add that steep channel. Add the rolling over. At the break of that. Delete these. like some kids. Really, we're breaking the whole buying channel from today. Right here, that's crazy. Just have to see where it finds support. But so far, still building more head and shoulders. VWAP might be a good price target. Yay! Past the frame field down the lava tube. Yep. Frame field. That place looks crazy, man. Yay! Pai. Hua Ukipa. Hua Ukipa. I don't know how to say that. At this point, we could see what. Let's see. Good info though, Bubba. Good call on the consumer inflation expectations. It could. I mean, if it's way outside of expectations, then those in small data sets can move the market. Bounce there. If it climbs up for a double top, grab some more if we do. Oh, keeper. Gotta go snorkeling when there's small waves too, right? I've seen the short pound there. It's no joke. Crown reversal? Is that like a double top? Like mini tops? Like a crown? Okay, I got some more puts. Okay, this pullback might not be very far, so crown reversal. Oh, it's like a W. The W pattern. Yeah, I'm just gonna break this channel. And then I think VWAP's probably pretty safe. Maybe we keep coming down. Five minutes for that data. Mal, have you ever surfed at the Great Lakes? I know guys that do, or know of them, I guess. I don't know if Erie is one of the, I think pretty much any of the lakes you can surf at some point. You guys surf the cargo ship waves. And then, of course, you guys get wind swell up there. Although it is freezing. There's a gap down there. Maybe Spy fills it? That'd be neat. %, on Beyond. AMC's at 2.85 from 2%. Run 10.75. That ain't bad. Where'd GME touch you? Yeah, there's actually a little gap there at 1640. I'm still looking just for this line. Even if it breaks it today, it's probably gonna close below it. But it doesn't look like it's gonna break it today. Probably a good day for some cover calls. This could still be bullish. We're getting kind of a rounding top here, but it could just wake back up. Risk reward of the upside is not as great though. I mean, SPY's already up 0.7. There hasn't been a large pullback at all. So if it does break here, you could get calls for small trade maybe. Same sort of setup that we had this morning. I've deleted it, but it's this one right here. So breaking that channel. See.
Day since September 29th. It has since now shown steady at 85.54 the barrel. And you're still seeing people moving to safe havens like gold, which is higher by $5.50. The yield on bonds have been coming down a bit. U.S. dollar pulls back, though, 105.62. In the meantime, for today's markets, Jenny Horn, markets correspondent here on Schwab Network, looking at
Jenny.
The earnings. What's the focus here when
Nice
it comes
intro there.
to
Yeah, a nice cold front coming.
Nicole, I will say these were objectively strong results. I mean, they beat on
Morning,
the bottom
Kitty.
line. They were able to post year-over-year growth for both of those metrics, but it seems like the reaction was relatively lukewarm. And I know the shares are up about 1.5%, but I think we could attribute that to really the strength we're seeing, like you just laid out, in the overall market, as they did give a more cautiously optimistic outlook, but likely wasn't enough to then ease the recent selling we've seen in shares. Now, if you look at the organic sales, they did rise around 8.8% in the third quarter. That was slightly better than the street had been expecting. Yet, if you look a little bit closer, you can see that underlying organic volumes were down 2.5% from a year ago, meaning that revenue growth came entirely from some of the price increases. In the U.S., Frito-Lay volumes were flat. Beverage volumes fell 6%. The stock, which was
Consumer
down
inflation expectations are in.
is only up modestly today in reaction. Now, we have seen that consumer products like paper
You're doing a
towels
5-star
and
restaurant for
more
lunch.
everyday consumer products
Looks like it, huh?
have been more strong overall in the market.
If it breaks this, I'll probably close these
other
puts.
names alongside PepsiCo like Coca-Cola, Kraft Heinz, and Colgate Palm olive oil were also down pretty significantly on the year. So it's not just a Pepsi-specific story,
Make me do it.
but it doesn't seem like right now the price increases are enough to boost shares overall.
I'll say
because,
double
again,
top
strong
first.
results, but major concerns have been that consumers are exhausted of these overall price increases.
Thank you for that. A good look there. So it's up 1.5% right now. And then we turn our attention over to a name like Rivian, an EV
15.5% on space.
Super hot for
This
a
is the
while,
way.
pulled back. What are we learning now? Why is this in focus here today?
Right. I mean, we're seeing, so analysts are updating their coverage given the fact that we saw shares sell off last week. It was down 20%
GNS,
in one single
6.5%.
session on the fact that they did reduce their guidance. But UBS today on Rivian actually upgraded shares to buy from neutral with a price target of $24. That was slightly reduced from 26. The firm does see a reduced probability of an additional capital raise over the next year, with capital likely not exceeding until the end of 2025, and thinks this market could refocus on improving fundamentals with the raise out of the way. So they did announce last week about $1.5 billion in senior notes. That was seen as a move to dilute the overall shareholder value of the existing shares, obviously, but this company needs the cash right now, frankly, and they're seeing their balance sheet at this point shrink and shrink every quarter.
I sold my Groupon puts. I don't know why it sold off.
Production of roughly 54,500 units versus guidance of around 52,000, with the potential for a raise, and forecast 10 times unit growth by now 2030.
Don't see any news on it either.
Still see an optimistic case for this stock. It's just going to take some time. And again, them just reducing their guidance last week, I think attributed to what has been a more growing pain
I'd hold them longer, but I only had
story
till
for
next
Rivian,
Friday.
showing that there's still relative relatively new in this very cutthroat EV space. I mean, shares are up only 6% on the year. They've pulled back around 46.5% from their 52-week highs, nowhere close to all-time highs.
Jenny Horn, thank you so much for all of that. Good to see you, and congratulations on the marathon.
Let's see here.
All right, insights on the news shaping
If
the
we double
markets.
top.
We welcome in Peter Tuchman, senior equity floor broker here at Trade Moss. On the
It's still trading this kind of tapered range, even though that's quite a bit higher.
All the conflicts that have gone
See if we
on
make
in
another.
Israel, and our market takeaway. Not
Another
to
rolling
minimize
over high.
What's going on there, of course, because we report with heavy hearts, but what's going on in the markets
These
now?
guys
Because
have
we
been in
saw
neck
some
brace for like 6
volatility
months.
and now some stabilization. Well, what do you think?
Look, I find the price action over the last number of days, you just mentioned it before, the last 3 days we've seen a positive bullish market. Okay, what's more important about up days is the transition into your day. We saw Friday the market opened down, okay, off of whatever the economic news that came out. When we saw an intraday reversal that was significant. I think Friday's rally, was a function of the fact that the treasuries had hit the high and had rolled over a little bit,
Right.
and that kind of put a little bit of fuel behind the equity market.
Right.
Then we saw Monday, and then we're seeing Tuesday with intraday reversals in the market that show that there's sort of, not that there's a bottom in the market, it just shows that there's sort of a constructive price action, that people are sort of choosing their areas to buy the market. Obviously, look, and our hearts go out to what's happening in Israel and in the Middle East in total. But historically, geopolitical situations often don't have a huge impact on the market. We know that unfortunately wars can be very bullish for the market. You're obviously seeing a rally in defense stocks.
Right,
You're
like a
obviously
name like Raytheon, for example, they were talking about with the Israeli dome, and that they use Raytheon
correct.
materials.
Unfortunately, that dome did not
for
work,
that.
but
well, it worked in part. Right?
yeah, in
It
part.
did work.
But anyway, you're seeing
Yeah.
the surge.
Yeah,
in
dome's
oil
always
markets and
working.
whatnot. Our market, I think,
Like a one-time
we're
thing.
separating from what's happening globally right now in this market. The intraday reversals, the up volume versus
Yeah,
down
some got through.
volume it's getting my
Overwhelmed.
attention. And it seems
Look
to
at
be that the people are picking their spots, and the market feels strong here, just for the last couple of days.
Yeah, and what did you think about the fact that this morning we were hearing from Tudor Jones that the U.S. might be in the weakest fiscal position since World War II? I just don't love to see a headline like that.
You know what?
What does that mean even? Obviously there's so much concern about U.S. debt and the financial and our deficit, the spending that's going on, and that's not stopping.
Right. But look, let's look at these are numbers, and I say it over and over again post-COVID, that to use economic data and to use a comment like that, we're talking about things relative to where historic data, if COVID had never happened and the world had not gone through what happened in 2020, then historically
New high there on AMC.
We use history to make
This
judgments
does look like
about
Crown
what the
Top.
future is. To come up with a comment like that, perhaps in the past, made some sense, gauging how much
Unless
debt
this
we're in and
breaks.
whatnot.
Oh, there's the break. Holy smokes.
We're in a new world here,
Right.
and surely post.
Oh, yeah.
That statement is.
All right, now let's see if this
that we threw $3 trillion
tapering type.
into the market over
Wow.
the last, those first 3 months
Big
coming
break.
out of COVID. The market, it contributed to the market getting back to.
Does the
even by
algo just
August
turn back
19th,
on?
2020,
Technical.
we were up 20%
I mean, the break was here, but
in 2020,
yeah, really that high day was
2021.
the next level.
So I mean, there's no way for us to
See if this holds though.
No, I mean, it's just I'm a firm believer that we cannot gauge old the terminology that we used in the past and the economic data
That's
that
crazy.
we used in the past to make a responsible
Boom.
judgment about the future.
What do you tell investors today? We did hear from the IMF raising the global outlook for the U.S. I'm sorry, raising the U.S. growth outlook by 0.3%. The global picture remains unchanged, but that's a little optimism there. What do you tell investors while some are expecting a Santa Claus rally? You still have some nice opportunities for investment with yields. You have dividend payers. What do you tell folks who maybe got excited in the beginning of the year on some of those tech stocks? What should be their investment plan for the next, 6 months, 12 months, years ahead?
Okay. I'm not an advisor. Disclaimer.
Right.
I think we need to analyze the year in total here.
Could be setting up an RSI divergence up here too.
We're really strong.
Yeah.
We're solid in the eyes of raising interest rates. The fact that we're starting to see a bit of a taper as far as that goes. Tech stocks came off the mat. We saw a beautiful reversal that way, and then we ran into some headwinds. Clearly,
Dude, that just crushed the puts.
Too fast, too furious rally.
That's crazy.
Coming out of 2022,
Calls just got
which was
wild
such an
with that
estimating
candle.
year. But think about where those stocks came from. In 2022, there were stocks that were down 40, 50, 60%.
Right.
And so where they had to come from is where they are now, that there's been a beautiful rally in them, but we hit up against some technical resistance in a big way coming into August, September, okay, which often can be traditional weaker months. I think that in absence of anything, look, obviously we're going to separate ourselves from the geopolitical and global situation right now. I think people have been waiting for the taper of the interest rate situation to get back into the market. I think people have been waiting for this, are going to start taking advantage of the sell-off that we've seen over the last couple of months as a buying opportunity, because taking into account the potential
How high VWAP
negative stuff going
is
on,
and came up
the
with that
market really
volume.
never sold off bad.
Moved to
You know,
VWAP
you
now,
have to
kind
think
of
about the first 7
isn't
months
great.
were so strong and so solid. We've had 2 months, 2.5 months of a sell-off, and now people are just taking the intraday reversals that we've seen over the last couple of days. To me, signify that it's people making responsible bets into the market.
So there might be some folks picking up on the bottom, or as we
Absolutely.
sold off
Yeah.
after all these months. And by the way, folks, here at the New York Stock Exchange tomorrow, we'll have the Burke IPO.
Correct.
So we look forward to that. Peter Tuchman, Trade Moss, thank you for being
Thank
with
you.
us.
My pleasure.
Up next, the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein goes through the technicals.
Lichtenstein.
Trades for Microsoft, Palantir, and Supermicro Computer. Next here on Trading 360.
AMC at 1037. What is that line from? Oh, that's the support from back here. That's a pretty big level actually, at like 1035 area. Will probably act as some resistance. Hey, my rad calls are up. Still no news on Groupon. SPY is in that gap filling territory. That could be resistance. I didn't close my puts. Yeah, remember at this break that you could, and a double top didn't, and I'm still holding. So, partially because this account, doing on this trading account, once I close this, I'll have no more trades on it, which sucks. Makes me not trade with good risk management. Here we are. Nice breakout trade right there. Took the call. But we are still kind of rolling over here, even if we hit the top of this channel. It's almost 1% on SPY. Wow. End up taking a loss in these puts. Because even with a pullback, it's going to be... Unless we get a full-on reversal, which could happen. 15 minutes to EU close.
So the Microsoft news on Friday afternoon really was quite surprising.
Yes, these contracts are daily, so
to create their own AI chip.
Yeah.
It actually knocked down Nvidia's stock, but Nvidia has bounced back. So the lesser reliance on, you know, something like Nvidia's AI chip, which is, you know, averaging around $40,000 per GPU. You know, that really allows Microsoft to A, keep things in-house, B, be able to create it to nurture what they're looking to do in terms of their AI enterprise, AI configuration, AI development. And this is very similar to how Apple had taken their initiative in creating their M1 chips. So, you know, I feel this is a really positive boost, both for the long-term bottom line and, more importantly, the short-term upside for a name like Microsoft. You know, AI is still so new. It's been around for some time. We saw the AI pop, you know, a couple of years back, and then it died off, and now it's back with the fury. But this time, it's here to stay because of the integration with the enterprise suites that Microsoft has. So for me, I really love the potential that it's going to have for the long term, and I believe it's going to be a booster as well for the short term. So it pulls back to this 325 price range and holds. I think that's going to be a great short term buy. I'm looking for Microsoft to make this run to around 340. But I don't believe that's where they're going to stop. There's some resistance there, but I actually think that they're going to try and push for that gap fill towards 350. So it's going to be this very quick dip to rip idea, especially in this environment. And again, it's if the market starts pulling back, Microsoft may just hold up better than other counterparts and a lot of the semis as well. So this is just something that, you know, could be a big booster and really help Microsoft hold up above their counterparts in both positive and negative environments.
Right. Okay, so at least you had, and I'm glad you brought up the AI chip news that came out on Friday. Ben, what would you think about the Microsoft stock at this moment?
That was a good reminder, Nicole. I'd forgotten about that, and that's what sent shares higher. Talking about, Charles was mentioning the Russell, the strength in small caps, and well, we've seen some strength in Microsoft as well after.
It does not have to be.
News, but also I think what's
absolutely does not have to be
the ability to hold this upper level amidst some
hey, you called that gap fill before noon or something. I thought I'd need more of a pullback for that, but
some of the geopolitical headwinds.
It's definitely looking like it wants to.
Tech has managed to shrug that off largely. Taking a look here at
least fill some of it. It's already filled some of it.
On this 5-minute candle chart was the rally we saw off the lows from last week down
this
around
was
310 all the way
just
up
a little bit of liquidity and boom.
That we've seen.
I mean, that candle was crazy with that volume.
As of yet. currently just balancing at this upper level, and in fact, starting to form a bit of an area of value, well, right around this 328 level. Let me show you what I've got here as we mapped out some of these areas where the market kind of paused and sort of regained composure. We use these areas of value to help us determine trend, and in this instance, you can see with them moving higher, well, trend has been and continues to be also to the upside here, hanging out right around the upper extreme. Again, no rejection of this upper level. It's not just on the 5-minute candle charts here that you're seeing an uptrend play out. We're also seeing that as we look all the way back to the lows that we saw back in November. These are daily candle charts here. So again, throughout November, we had a higher low in January, and as we map out some of the areas of consolidation that formed to higher and higher levels, you're going to see a very similar staircase type pattern as we identified on that 5-minute candle chart here. But this is a longer term chart here, so this really gives the weight to the bulls in this instance. Currently balancing as we stand here around 335. The bulls don't want to see us below 307. The working assumptions that we're going to break out at some point to the upside in a vertical phase in line with the pattern that we've been seeing, and then the bulls will look to see a new area of value form at a higher level. As we step away from this chart here, I want to show you what's going on with taking a look at this chart. An interesting one, because here's the move we just looked at, right off those November lows, big move up, sideways consolidation that's been forming around the 338 level. But take a look here, because this move, this is exactly what the bears didn't want to see, right? As we were forming areas of value at lower and lower levels into these November lows, look, the second that we form this area of consolidation around 232, remember, the next working assumption, if the trend is still, or the working assumption is a valid one, is that you're going to see value form at a lower level. In this instance, look what happened. Instead of forming value at a lower level, we rallied, took out 266, and it's been, again, in that uptrend since.
I see. And look, I mean, when you see those lows, it wasn't that long ago that we saw those lows. I mean, we really, truly had an amazing year. But you do have some bullish possibilities there, Charles Moon. Tell me your final thoughts here on Microsoft.
Yeah, and again, you know, when we look at the big seven, right, the big seven out of the NASDAQ 100, Microsoft is just underneath Apple in terms of market weight. This is definitely a name that's going to rebound very nicely in bullish conditions. You know, they made some really strategic moves to help their bottom line. They started downsizing a bit, doing layoffs, but that was really in anticipation to funnel that money into R&D, and that R&D is already starting to pay off dividends. You know, that investment into OpenAI, that $10 million, they've been able to fully integrate that and offer it up to their client suites as well. And so now, you know, their contracted clients, you know, they work as consultants, you know, that's being able to be utilized for companies that use the Microsoft Teams and Microsoft software. So, you know, we're already, you know, Microsoft's already starting to see some dividends play out from their investment. And for the long term, I believe this is a really smart move. They're staying ahead of the game. They're really funneling their money where it should go, and it's going to pay off dividends in the long run.
Right, understood. Okay, let's get to Palantir, which actually secured a contract, and the stock is up about 3% today as they got a deal with the Pentagon for AI expansion. It's already been up about 123% in 1 year, or at least, yes, 1 year is 123%. Charles Moon, what do you think about this name?
Same deal.
Yeah, so, you know, initially off of their IPO, they made a huge run up.
And liquidity for the bulls here if it breaks.
Soaring back to earth.
Really need to break
this is kind of
this channel.
Clue that I noticed this year, because we saw a lot
I'm
of
gonna
these
get calls on this break.
and then all of a sudden they started rolling off.
If it happens.
It's a prime example of that. So Palantir,
holding on to my putt still though.
Primary business is around AI. But the difference is that a lot of their clients are government contracts. So, you know, they're not securing small deals. This one with the U.S. Army, of course, was around $250 million. But they've been able to sustain. And that's really where I noticed that they're showing strength when a lot of their counter peers and other growth stocks have really come back down off of those highs. So it's the fact that they've been able to just kind of break out of consolidation over the last few days. This news is hit, and they're not that far from their 52-week highs. I'm really bullish on this name for the possibility that they're going to actually push beyond that 52-week high and start to break out. This is where I'm looking for a small pullback right around that right around that $17 marker, maybe even a little bit higher at around 18s could be possible here, but 17 would be ideal. I'm looking for a really fast hold at old resistance for a snap back to this $20 mark, and anything above 20 really starts opening the skies. They could really make that push for 30, and this is where we see the leaps and bounds type of play in a growth name. It's cheap enough that it could draw a lot of interest from retail. It's certainly
All right, so let's go from there and send it over to Ben Lichtenstein, who can take a look at the chart of Palantir. I mean, I mentioned that it's higher today on this news, but, you know, Charles Moon was giving us a bigger picture.
Yeah, Charles was talking about that 17 level, Nicole, and I definitely had my eye on that as well. I wanted to begin first and foremost with how we've been relatively range bound and contained for, well, we're going all the way back to the beginning of June here. We were down around 13 earlier this summer, rallied up into the highs we saw in July up around 20. And then again, kind of just rotational within this range. It was that $17 level, 18 I think it was that Charles was referencing. He also talked about take out 20 ultimately, and there was some room to the upside. So in this chart, again, just wanted to identify upper, lower extreme, pivot, not a lot of conviction one way or the other, because we were just talking about Microsoft, a completely different scenario here. Now, when in doubt, zoom out, and that's when you start to see some conviction here. You can see on this chart going back to, now we're looking at the
downside maybe here.
Earnings set this higher up into that $8 level. Wash, rinse, repeat. We're talking vertical phase transitioning into that horizontal, more overlapping rotational price activity. And again, this is the area that Charles was referencing. Again, 17 being the key significant area to keep an eye on here right now. Now, the other reason why I'm personally giving the benefit of doubt to the bulls in this instance is as we take a look here at the weekly time frame. Again, Charles talking about some of that strength. You can see that really playing out here off those lows that we saw earlier this year. We just looked at this run up off the May lows. High conviction, vertical phase up, candles that are exhibiting higher highs and higher lows, and then you can see you transition in this sideways horizontal phase after finding a stopping point. But this move up here, breaking out of that range that we were forming around the $8 level, and as you can see on the left side of the screen here, taking out that $12 level with conviction, definitely seeing the bullish narrative that Charles painting here in terms of shares of PLTR and the strength he was talking about recently. I like that move up through 17 as well.
Okay, so the breakout and the takeout and still up there. I like how you put that together, Ben. Any final thoughts, Charles, on Palantir, and then tell us about Supermicrocomputer, please.
Yeah, so Palantir definitely has seen some accumulation at 14, and it looks like that the possibility of old resistance could be the next accumulation level. And again, this stock trading so close to the 52-week highs, where a lot of other stocks, even the bigger names, are far from those levels, really defines the demand in this name. So this is definitely going to be a watcher above that $20 level. It could be a fast breakout play, but for the long run, I think, in my opinion, it's here to stay and is going to continue to rise.
Okay, and then Supermicro, which ran up to a high, gap down after its earnings, but has been running back up once again. Supermicrocomputer, Charles.
Yeah, so this stock has been, getting shut down at around 298 to 300. That was a really critical level. And I said that it was approaching this level, and if it ended up rejecting, it's a great little short-term fade right off of that price point. But today, it busted through that level probably within the first 5 minutes. It didn't stop. It started rising. There's a great gap fill at 340. That seems to be the retail target here. This is certainly a stock that is up a tremendous amount. It is a retail darling. It is a investor darling. This is certainly another name that's benefited from the semi demand, the AI demand, and certainly this is a stock in terms of growth that is still trying to find its way. Now, in terms of valuation, it's way up there as well. But, when we look at momentum stocks, it's always based on short-term demand. Right now, that demand is coming in really, really aggressively on that 300 break. It wouldn't surprise me that, within the next day or so, if the market continues to rise, especially if the Russell continues to rise, that SMCI makes that run for 340, and that's going to be the determining factor. Anything through 340, they have that potential to really be that secondary breakout play where it's going to pop and drop. But that's really where I'm looking and eyeing for the short term. There's really not much upside resistance in the near term right now. Nothing to really step in the way from a technical standpoint. I just like this breakout here, and I believe that it could get to that 340 mark soon.
Yeah, and look, you said you're watching a lot of these tech names, you're watching the triple Qs. It sounds like, you know, you really are seeing a little bit of upside potential in the group overall. Final look here, Ben, at this super microcomputer chart, please.
Yeah, Nicole, I'm definitely watching that aggressive short-term demand that Charles just pointed to. And you can see that in the form of these big green candles to the upside. The breakout that's playing out here after forming areas of value at higher and higher levels, we establish a trend to the upside. And you can see that we're now in a vertical phase here as the market seeks a new area of value at a higher level. Let's move away from this 1 hour candle chart. I want to show you what's going on here in terms of the bigger picture playing out here, because Charles was also talking about how there's not a lot of resistance here at this upper level. Ultimately, should we continue here with momentum to the upside now that we're through this pivot 280, open up a door for a retest of 357. I want to also show you why I'm somewhat bullish this one as well. You can see the run up we've recently seen gets us above the 50-day moving average. We've got some enthusiasm associated with the RSI here, and Charles mentioned these two highs that we had seen up around this, well, we're talking 290, 300 level. There's momentum as we take those out as well. So above the 50, above some key areas of resistance here. This stock's got some momentum, some energy, and as he mentioned, aggressive short-term demand. You can see that in the form on the right side of the screen, the big candles to the upside.
Great to see you both. Super microcomputer, Palantir, Microsoft, a great big three today. Charles Moon of Prosper Trading Academy and
SPY still building liquidity.
Liechtenstein. Thank you both very, very much. Good to see you.
Do trade breaks if it does.
Up next,
when it
we're
does.
going to spotlight the very latest trends that we're seeing in commercial real estate. The CEO of Marcus & Millichap will be joining us live here at the New York Stock Exchange. You see them there ringing the bell. A lot of excitement. MMI is the ticker.
How high VWAP is now. I'm getting some calls there. Come on, trade. Heck. Oh, you just closed 3 minutes ago.
reflecting the bad news that we've seen around Goldman Sachs over the last couple of months here. So they do believe that that's already priced in, but the earnings that they will be reporting, they are of the belief that the earnings announcement in itself is actually going to be a little bit underwhelming compared to the street's expectations. Now, the key here, Nicole, for Goldman Sachs is not only their reduction in some of the retail space and really trying to focus on their commercial business, but also what's going on in the M&A space, which has been their bread and butter over the last decade or so. And we are starting to see the IPO market thaw here a little bit. They did actually participate in several of them over the last couple of weeks. But if they continue to see a little bit of this drag when it comes to their retail offerings, I think that's going to be a very negative sign when it comes to the stock here. And we are already hearing some chatter from investors around if there's any possible leadership changes. So we'll get an update with that as the financials start to report earnings this Friday, as well as
double
going
tops
into
here
next week. And we'll get a little bit more of a clearer picture. But once again, they keep their outperform rating on the shares because of the risk reward when it comes to where the stock is priced right now and the potential growth that they could have here in the near future.
All right.
Close
Thank
one
you
at
for all
high.
of that, Kevin Green. Great to see you. It's time for a spotlight on commercial real estate. Joining us right now, Hassam Naji, CEO of Marcus & Millichap. And you may have seen them, the 10-year anniversary of the IPO, you and the team ringing the bell. MMI is the ticker symbol. It must have been. It never gets old getting up there, right?
Well, we didn't get to ring the bell during our IPO because of scheduling conflicts. So today was really special for myself and the team that has been here and so dedicated to the company. It was a special occasion.
Yeah, 10 years.
AMC only up 1%
something's
now.
going right.
Yeah, pretty big
They're
rejection
still
there
here
on that
ringing the bell.
resistance.
Tell me about the real estate market overall. You're the largest real estate financing firm in the United States. How's business been looking, and what's the outlook? I think the outlook is really the part people want to, because they're worried about commercial real estate. You know that.
Sure. Thanks for having me on the program again. It's great to be with you. We are the largest investment brokerage and finance firm in North America, including Canada. And with 2,000 professionals on the ground between our investment sales professionals in 80 offices and our 100+ loan originators, we have a real pulse on what's happening in the market. And the
Maybe a
Fed's
double top there
sledgehammer
on SPY.
to the financial system over the last year plus has created the most severe disruption since 08, 09 for different
I'm out of the rest of
reasons.
those calls.
But nonetheless, when interest rates go up as much as they have and as quickly as they have, valuations just basically break down. And so sellers and buyers are trying to recalibrate, and financing has been so volatile, banks have really pulled back on financing commercial real estate, I think in an overdone fashion. So all of that is creating a bit of a logjam in the marketplace right this minute. But we believe because fundamentals are healthy outside of office buildings, because commercial real estate has so many other subcategories. With time, as prices recalibrate to higher interest rates, the market will get moving again.
It was that trajectory of the rate hikes.
Yeah.
It was so fast, and when debt comes up for refinancing,
right back up.
to refinance, it was, when
Yeah,
you're
break back in
looking
that
at
channel was
a
not
jump of
a good sign, but here we are.
difference, basically,
Yes,
right? Is that
that's
what you're looking at?
that's exactly right.
It's, it
Like a
slams
double
you,
top,
and
maybe.
that's why those regionals, so many of those regionals came under pressure. You did mention the different parts of commercial real estate. Where are you seeing some strength?
Multifamily, basically apartment rentals,
Or just a stop
has
up.
a
Look at that.
95% occupancy currently.
Yeah.
Rent growth has really slowed down because of a surge that was fueled by the pandemic and the movement out of the urban markets to suburban markets. That kind of a surge will be usually followed by a cooling off in rents. We're seeing that. Shopping centers, believe it or not, have made a big comeback.
Really?
Yeah, because retail is
Good.
way ahead of the curve in reinventing itself because of e-commerce. A lot of that pain is behind us in retail, and the consumer is coming back strong because of pent-up demand. And other examples of strength is self-storage properties. We're seeing strength in medical office. We're seeing strength in mobile home parks of all different types of investments. And that's the beauty of commercial real estate. You have a variety of different ways to participate in the industry.
Yeah, and it makes sense. I mean, you see what people need and what they want, and mobile homes have really, I mean, you see some overlooking California and Malibu. You see some in the Hamptons.
Of course.
I mean, some of these beach-type properties, mobile homes, millions of dollars. When you talk about the financing and the investment banking part, investment sales that you're doing, how do you go about trying to make this work in this difficult environment? How are you getting that liquidity to happen?
Well, the good news is the banks are still active. Their underwriting has been changed so much that they're essentially pricing themselves out of the market. The loan to values, in other words, the proceeds that a borrower would get normally would be driven by 70% of the price being financeable. Now it's down to maybe 45 or 50% being financeable.
Yes.
So private investors in particular are putting in more of their own equity because as prices adjust and they want to buy certain assets they've wanted to buy for a while, they're snatching those up if the price is being adjusted. And we're seeing some of those price adjustments spur multiple offers. And there is financing, just less of it.
Right.
So a lot of our clients
That was more like a
short-term
double top.
financing, leaving themselves optionality to refinance when interest rates come in. But at the end of the day, if you want a certain asset, you're going to find a way to get your hands on it.
And that's really been the theme, not only in your business, but also in just having startups and getting financing. You're seeing a lot more venture capitalists and angel investors because they're not able to get the financing the way
exactly
they did.
right.
And people are putting their cash to work in alternative investments like real estate overall.
Right.
At this point now, what would you like to see happen for the business? You've been with the company for so long, maybe not on the day of the IPO, but a long time. You have great experience. What would you like to see happen for this company in the next few years?
Sure. I was actually the chief strategy officer for the IPO. And so I was here on the day of the opening, was part of the team that led that effort. Been with the company for 28 years and very proud of it.
Good, thank you.
So we're doubling down on ourselves. This disruption puts pressure on the financial performance of the company, but we're incredibly well capitalized. We have no debt. The company has more cash per share than any of our peer group. And we're doubling down on the strategy of investing in infrastructure, investing in talent. We're making acquisitions, and we're using the market disruption as a part of a long-term strategy to become even bigger and more diverse.
That sounds pretty great because at this point, being the largest with your footprint at this point and having no
Not double
debt,
top. There you go.
cash, and hiring new talent
Those are just little
and
stop
having
up.
those expansion plans. Just
New high
saying,
there.
What recession?
Get all
What
those
high
calls.
rates? And and that's what you have to do. You have to have the vision and innovation and power forward. Because,
That's exactly right.
If you have the capital to do so and the contacts to do so, it's the way to go. All right, Hassam Naji, CEO of Marcus & Millichap. Thank you so much for being
Thanks for
with
having me
us
on.
today, and happy 10 years to the company.
Thanks a lot.
Coming up next, disruptors. Unity Software has big shakeup in the C-suite. George Sillis has the details. It's next.
we are. There's some more tapering, maybe. Yep, gotta hold those calls. This is a little tricky one. Tricky.
Earnings per share. If you look at the last 4 quarters, net of gains and losses, because there were a couple of quarters of gains, a couple of quarters of losses, they did earn about 20 cents a share. But if you look at the next 4 quarters, they are expected to earn adjusted profits for each of those quarters, and that increase is about to 65 cents. So in other words, we're actually seeing about 3 times EBITDA growth on a forward basis with about 30% sales growth. So I think just the financials alone demonstrate some improvement. And with that said, you can see some of the analysts are constructive on the stock. For instance, Stifel adjusted their price target down from 50 to 40, but they do maintain a buy rating on this name.
Yeah, and just for clarification, so John Ricciello today is stepping down immediately, and former IBM Corp president and Red Hat CEO Jim Whitehurst appointed the interim CEO at this point. So I just thought it was important to get some of these names in as well. In the meantime, tell me about, and good stuff on all that's been going on with the company, and as they tried to have this rollout of fees and didn't go very well or in their favor at all. Tell me a little bit about an example trade for Unity Software today.
Yeah, so we've got earnings coming out across the board for most companies publicly traded. So looking at Unity, Nicole, we can actually see it's got some positive short-term momentum, and it's going alongside with the market as of late. They do have earnings coming out on the 9th of November, so that's something to keep in mind. But I think if you look at the way the stock's been performing in the past few weeks or so, and like I said, it does have positive momentum. So what we can actually do is construct a bullish trade with potential give back. In other words, looking for some short-term weakness, but intermediate-term strength. So we'll actually place a long call diagonal here. So what we'll do is we'll actually go out to the November contract and purchase the in-the-money $29 call option, but at the same time, we'll sell a October out-of-the-money $33 contract. So we're using that short-term October contract to help finance the in-the-money November contract. So altogether, this would cost a trader about $3.50 a share in debit, or $350 a contract. So ideally speaking, in the next couple of weeks, we'd like to see the stock trade below the short strike of $33. But you have to keep in mind that this is still a bullish trade, and $32.50 is essentially break even for the contract. That is the November contract. So it is bullish, but we'd like to see, again, the stock not trade above the $33.
There's an RSI divergence. This other one broke clear, so it didn't diverge.
Which time, again, if that happens, the November contract basically has
There's
a
one though
limited
right
profit
there.
potential.
Could be signaling on top.
George Still, it's nice to see you every day with our disruptors. Coming up next, our panel is ready to take a look at retail. Amazon's Prime Big Deals this day is underway already. We'll get a peek at the big e-commerce trends that we're seeing ahead of the holiday shopping season next.
Dish up 2.5, 2.15. We're at almost 7%. 7%, yeah.
Competitors like on the other Amazon days where they also pile in with deals too. What kind of landscape are we seeing, Claire?
Yeah, Walmart's got their deals going on too.
An enormous amount of popularity.
They started a day before
sale, so
Amazon.
We see that about 39% of Americans plan to shop specifically the Amazon sale this week. That's a pretty large portion. That's actually 2 points ahead of Cyber Monday plans when we're looking at folks specifically getting ready for the holidays. So knowing how important this week is for getting a lot of folks into that holiday shopping period.
Nice head and shoulders up here.
Should be a really strong performer.
Especially on the outside of this channel.
Of course, in July, the Prime sales and the associated sales that follow along, like you said, also did very well.
Yeah, understood. Jerome Marti says, I was looking at, it's my understanding that holiday shopping is likely to gain maybe less than prior years, but still likely to see some more spending year over year. How are you looking at this Amazon event today, and what's your outlook?
In a collaboration with Centric Market Intelligence, we actually discovered that the discount penetration, the amount of merchandise on sale this time around, is actually less than it was in July. And also the average percent discount that is being offered to customers today is less than it was back in July. So what we're seeing is that retailers, not just Amazon, are being more strategic about the amount of discounts they're offering, and in a timely manner. For Amazon, that means it has lightning deals. So what they're hoping is that consumers will have a similar effect to Black Friday, which means that they are timely discounts offered during a certain period of time that will entice them to do a lot of that impulse shopping right in time for the holiday season to prepare. And also this will protect margins more instead of giving everything away. So we're seeing that this retailers are being more strategic about those discounts this time around during this Prime event.
And at this point, as we see this, and people will obviously be very selective, as you noted, Jerome, you said how there's less on sale, fewer discounts than there were in July. People are going to be very particular. We don't have supply chain issues. They will be able to get what they want for the most part, Claire. What kind of trends do you see that may work in favor of some of the retailers?
Certainly seeing a lot of folks are still in this kind of splurging mode, if you can believe it. Particularly, we're seeing that among young adults and high income households, where we see that these sort of discount events, even though, like Jerome said, they might not be as aggressive as what we saw in July, do create a sort of permission structure to splurge and spend where they might not have otherwise. And we've seen a lot of folks in those segments have actually kicked off their holiday shopping much earlier, before Labor Day, where they hadn't in years past. Again, not necessarily anticipating a supply chain issue, but more just taking advantage of those deals and discounts when they're available. They do seem to be really strong motivators for everyone.
Yeah, you did mention how, Claire, in your notes, how the Amazon event is likely to see maybe 40% of folks plan to shop here. These Amazon events, you have Target doing Circle Days too, so that's another thing. And a lot of buy now, pay later, Claire. Does that worry you?
I am a bit concerned. We did see a big jump this year in the number of people who are at least considering using buy now, pay later to afford their holiday purchases. So knowing how popular that was for the July Prime Day and all of those sales, it can be really attractive, right? Often interest rates are zero for many of those buy now, pay later loans. So as compared to a credit card, it might seem like a great idea, but we do know that people who tend to stack those buy now, pay later loans can really start to end up in trouble if they're not paying attention to what that total payment is going to be as they add more and more loans to their docket.
Yeah, and Jerome, we just had the real estate CEO on. He said shopping malls are looking better. People, that's good news. Final thoughts here on what people are going to be shopping for, and whether your names that you always talk about, names like Walmart and some of the others, are they good? Are they positioned well?
Absolutely. So I was actually at Woodbury Commons over the weekend, and the consumers were out shopping. There was not a parking spot available in the mall. But the biggest lines that I saw were, of course, at Lululemon, Abercrombie & Fitch. We do know that the consumer is looking for a value, especially that middle class and high-end consumers also trading down. So Ross and TJ Maxx saw very strong numbers last earnings season and are expected to continue to do well going into the holiday season. And analysts polled by LSEG are also very bullish that Prime Week is definitely going to help Amazon not only beat earnings expectations, but post a positive surprise for the third quarter and fourth quarter. And Walmart is poised to even attract even more members, even more shoppers as they go and shop for groceries and want to save on everyday shopping.
Okay, thank you both, Jerome Martis and Claire Tassin. Thank you for being with us, and thank you, friends, for being with me here on Schwab Network every day at 11 and 2. I'll see you at 2 o'clock for the watch list. Fast Market is next.
You could think getting commission-free trades is as good as it gets, but you know better. At Schwab, free means more. You get commission-free online trades and quality trade executions on our powerful platform, plus the satisfaction guarantee. Expect more from your firm. Trade up to Schwab, the better place for traders.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Welcome to Schwab Network.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up-to-the-minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics.
No noise.
Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market day.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network available anytime, anywhere, on any device for free. Schwab Network. Hello, everyone. Welcome to the Schwab Network. Welcome to Fast Market.
The ego
on
on
the
you.
Mantra, friends don't let friends go slow. I'm Kevin Hinks. I'm your host. I'll be taking you through the next half hour. We got a great show for you today. We're going to look at EVs and we're going to look at defense contractors. An interesting comparison between the two. We have Alex Coffey. We've got Caroline Woods. We've got Randy Frederick joining us. We've got Ben Lichtenstein, Andy Swan, George Tillis. We got a full show coming to you today. We're going to talk about a lot of great topics. But before we bring in our first guest and my co-host, Alex Coffey, let's look at the four major indices and see where they sit at 11 o'clock Chicago time, 12 o'clock Eastern. The S&P 500 up 1.1%, almost 48 points to 43.83. The NASDAQ 100 up 1.25%. 184 points to 15,231. The Dow Jones Industrial Average up 0.8%, 267 points to 33,871. And the Russell 2000, the outperformer of the day, up 1.58%, almost 29 points to 1784 and some change. Now, I want to bring in my co-host for today's show. You know him. He's all over the network. He's on every show. He's the co-host of Next Gen Investing with Jenny Horn coming up next on the TD Ameritrade Network, Mr. Alex Coffey. Alex, I'm going to ask you this question, and then I'm going to ask Randy when I bring him on. How do you explain indices, all four indices up like this with everything going on in geopolitics?
Yields aren't going higher anymore.
That's the easy way to pronounce it. Yields lower means stocks are in favor, correct?
Quite honestly, yields going sideways, I think, was welcomed given the volatility, Kev, and that's really what we've seen. The Fed had some statements today from Raphael Bostic and essentially laid out a base case where inflation could come down, where rates are now, doesn't anticipate the need at this moment for higher rates. That was seen as sort of a dovish statement from the Fed. But this has been a Fed that has been, pretty keen on not putting themselves in a box. We'll have plenty of off-ramps. If something changed, I can have a different opinion. We may have to do more. We don't know the impact of geopolitics. Statements like that sort of leave that optionality. But one of the big themes the last few days has been how financial conditions have tightened because of the long end of the curve coming up.
Yes.
This is a dream scenario from the Fed that they don't want to break, because what we've seen is a healthy steepening of the yield curve. We've seen the bear steepening where the long end is catching up to the short end.
That rarely happens.
It's very rare because it's typically associated with the soft landing scenario, which, as much as the Fed likes to talk about soft landing, they haven't engineered very many of them in the history.
Exactly right. But for them to get to where we are now with a market rallying, even with geopolitical issues, is nothing short of amazing. Lori Logan yesterday morning kind of started the rhetoric on this. Philip Jefferson kind of continued it throughout the day, and now we get Raphael Bostic doing the same. So the narrative from the Fed seems to be adjusting over time. But we did have some earnings come out overnight. Before we get to Friday's big earnings release in the banks, we did get PepsiCo. And this is a fascinating story in PepsiCo. Remember, if you watched the show yesterday, we featured PepsiCo on Fast Market with Folio data. Now let's go to the New York Stock Exchange and bring in Miss Caroline Woods to cover PepsiCo's earnings. Caroline,
what a wild trades.
This is an interesting story because of the way we covered it yesterday, which is this Ozempic story was overblown. Did it show up in the earnings?
Hey there, Kev. No, it didn't seem to show up in the earnings. In some prepared remarks, though, the company did say that they are focused on smaller, more portioned, controlled-size packaging, lower saturated fats, lower sodium snacks. So I think that they are trying to
It is definitely
pivot to a
tapering.
more health-conscious consumer.
Take
But
a while, though.
overall, this was a beat on both the top and bottom line, and PepsiCo actually boosted its outlook as well for a third consecutive quarter. The snacking and beverage giant posted adjusted EPS of $2.25. That topped analysts' expectations. Meanwhile, revenue grew about 7% to $23.45 billion. The expectation was for a little bit lower than that, so also grew there. Pepsi's North American beverage unit did post a decline of 6%, a volume decline, I should say, of 6%, but the food division in North America performed a bit better. Quaker Foods North America volume rose 1%. Frito-Lay North America's
Or
volume was
32%.
flat. So essentially,
Wow.
revenue growth came from price increases. Surprise, surprise. In terms of that boosted outlook, Pepsi hiked its full-year outlook. Now expects constant currency earnings per share growth of 13%. Its previous forecast
I'm
was
gonna average it on my
12% growth for
Let's
the
break
full
this
year.
channel.
And then looking ahead to 2024, says it's forecasting organic revenue growth on the high end of its 4 to 6% range. So getting a little bit more upbeat with the outlook as well. So just taking a look, Pepsi shares up about 1.5% today on this news. Not a huge move, but this is a company that's been under pressure this year because consumer staples have just basically been out of favor. So getting a nice little pop on the beat and the boosted outlook.
You know, Caroline, trading and investing at times is a science, but there's an art to it. And when we came into this report, the sort of art side of trading and investing really kind of said that the negativity surrounding this potential report, the earnings, from diet trends to stock performance to analyst commentary, it just seemingly set up for a situation where all the news was going to be better than whatever was expected. It reminded me a lot of the Nike report a few weeks ago, where the bar was set so low, but this wasn't like an okay report kind of like Nike's. This was actually like a really strong report, a beat and raise quarter, and it's led to some upside here in the beaten down consumer staple. When you look at Pepsi, when you look at this report, I know analysts have weighed in. Any final thoughts on this particular company as you assess this report as we go forward?
I'll give that to you, Alex. I will say, though, I think the commentary around the stretched consumer, so there's the Ozempic side of things, which we have to remember, it's still hard to get. It's still an injection. As it becomes more popular, potentially in pill form, that's when it could take maybe a bigger hit for companies like Pepsi. You know, people aren't maybe going to be craving Doritos and Cheetos quite as much. But I think in terms of the consumer, I think it's important to note that CFO Hugh Johnston did talk about kind of some caution on behalf of the consumer. So their revenue forecast is with a cautious consumer in mind. But he did make a comment about that they have some plans in place
Rounds up
to
13 here.
potentially lower costs for consumers if they see that the consumer continues to be stretched. So not exactly a huge vote of confidence in the consumer. That being said, he did say that the areas where he looks to see, just to kind of get a better sense of the consumer are actually tracking pretty strong. He pointed out the convenience store channel. He says typically when gas prices are up, that area and consumer incomes are stretched, that area would perform poorly, and they didn't see that. They said that he saw revenue there was up 5% in beverages, 8% in foods in the convenience channel. And then number 2 is food service. He says that's also typically a leading indicator, and that's still growing double digits. So I do think that's kind of some mixed commentary on the consumer.
Heavy on GME is still so low.
They're pretty evenly split in terms of buy and hold. About 45% have a buy rating at this point, which I think is notable given the fact that PepsiCo is still down more than 9% year to date. But, this is a company that the 3.1% dividend used to seem pretty attractive, and now when yields are higher, I think that doesn't seem as attractive. I will say I was just taking a look at the breakdown for Coca-Cola, and there are far more buys for Coca-Cola than there are for PepsiCo. I was taking a look, 18 buys, 5 holds. So the majority of analysts in the buy camp for Coca-Cola, and there's one more in the hold camp than in the buy. So a bit more cautious for PepsiCo.
Yeah, it's interesting. This data from Walmart and the actual earnings from PepsiCo. In the trading business, we call that an out trade, Caroline. Someone's data isn't lining up with the others. But Caroline, thanks for coming on. As always, have a great day. We'll see you soon. All right, now I'd like to bring in my second guest of today's show. He is the managing director of trading and derivatives at Charles Schwab, Mr. Randy Frederick. Randy, I'm going to ask you the same question that I asked Alex to start the show. How do you describe what's happening
big lots
with the indices, with everything going on in the world right now, how markets are not just rallying, in the midst of all this turmoil, Randy, we've got 3 straight days of upside here.
Well, I've talked about this a few times the last few times I've been on, is that basically we, almost all of the economic data was expected to trough by mid-year to slightly into Q3. We know that earnings are expected to be better in Q4, and you get a lot of earnings upgrades and even better next year. We know that interest rates, for the most part, are probably done. I mean, with what's happened over the weekend, we've seen the probability of another rate hike this year drop from about 50% to only about 20%. I wasn't convinced it was going to happen yet, because historically, going back at least 8 years, if that probability doesn't get above 65%, it hasn't happened. And now with it being around 20%, we're going to have some pretty major changes in the economic data. We know that inflation continues to moderate. That's an issue. Yes, volatility has picked up a little bit, but honestly, it only just barely crept into what is just above the normal range. Anything below 20 on the VIX is pretty much normal range. It's pretty much the long-term average. So for the first time last week, since the debt ceiling deal was signed on 6/1, we saw the VIX creep up into 20 just on an intraday basis. Obviously, it's well back below that right now. I'll be honest with you, I put out a report every Friday that I've now published for 15 consecutive years. That report last Friday was the most bullish I believe that it has ever been. That for 15 years, that's remarkable. And, again, I think if what happened in Israel over the weekend had not happened, we would have been up substantially more yesterday and probably more again today. But I think the fact that we are up, and now we're up for the 3rd day in a row, is indicative of exactly how bullish everything has got. Now, some of the things like put-call ratios, changes in open interest, volumes, all these different things, some of them were just outright bullish. Some of them had gotten so bearish that, again, looking at historical patterns, when they get that bearish, it almost always signals a change in direction, and it becomes a contrarian signal. I've never seen so many of those line up as I did last Friday, and I sent that out across X a couple of times to sort of point that out.
Yeah, and it's interesting. And the market saw that data last Friday and gapped lower to start the day. So it got the market wrong. There's been a lot of data that the market's been misreading, but it's hard, Alex, not to misread what the Fed's doing here. And some of the comments from the Fed looking forward to CPI on Thursday, the inflation data that we're going to get. PPI, I used to make a joke that it was the distant 4th cousin in the inflation story. It's getting kind of important now. And now it's coming out Wednesday. What are your looks? What do you think about inflation? Is inflation, the number coming out, another catalyst coming up?
It's a catalyst, but it's not the driving narrative piece of the story anymore. And it hasn't been, quite frankly, in my opinion, for at least half of a year. It's still going to be a part of discussion. The Fed's still, somewhat in this tightening cycle towards the end. But we're not a year ago where, the inflation story was getting constantly worse. We didn't know how far and how fast the Fed was willing to go. They were still escalating how much they were tightening. If anything here, we're tapering off, and we've been tapering off. At one point we were raising, 75 basis points at a clip, and now we're skipping meetings and raising 25 basis points every other. And so when I look
there it
at
was.
the situation right now, Kev,
I didn't draw it, but
I think the primary risk that the market
see it now. The market's ripping.
Watching the economy, the Fed,
another
inflation,
breakout.
all of this sort of walking a tightrope.
See if it continues to respect this
the inflation picture was getting better.
tapering channel, or if
the economy wasn't cracking to the extent
bullish.
that maybe the bond market had anticipated it, and this soft landing seemed possible. The risk then was that the Fed did too much, and it disrupted that through policy error, and we didn't have the soft landing that we were going to have. This geopolitical tension has actually potentially given the off-ramp to avoid further tightening of the monetary policy. Doesn't mean that a soft landing is going to happen, but there's a path to it, and I think that's what the market's excited about.
Randy, we can't deny what's going on today in crude oil, in the dollar, in yields. Those all favor stocks. And I don't know if they favor it as much as they're moving up, but this is a strong market going into not only the beginning of third quarter earnings season, but some data here at the second half of the week, Randy.
You're absolutely right. And as you said earlier, I agree with everything Alex was just talking about. I hate to use the term Goldilocks, but in some sense, this convergence of all of this data and all these factors that he was just talking about do sort of create this Goldilocks scenario. Yesterday, obviously, we saw defense stocks go way up. We saw the Israeli stocks go down. Most of those Israeli stocks are rebounding today. Interest rates have come down substantially, as you said, which again puts pressure on the Fed to some extent to not do anything. And again, the futures markets are saying that the odds of them doing anything now for the rest of the year have come way, way down. And then we've got the seasonal factors, which we really haven't talked about. Historically, September is a terrible month. We had another terrible year this year, but October is substantially better. Both of the last 2 years, when September was way down, October was way up. So the seasonals have also come into favor. And as you said, Q3 earnings season is just now starting, effective today with the Pepsi earnings that you were just talking about. And we're going to get a whole bunch of banks by the end of this week. Most of those things, for the most part, will bolster, I think, the direction that the market's already heading. And PPI, as you said, and I agree, most of the time it's a yawn. Nobody cares because the CPI usually came out a day or two before and everybody paid attention to that. This weird sort of thing with the calendar, we've got the PPI this time. People, I think, will probably pay a little bit more attention to it, but ultimately, I think we'll still be holding out for what happens with the CPI. And again, I think we see wholesale inflation a little higher, probably because of energy prices, but the core inflation, which is what the Fed looks at, is continuing to moderate, and there's just not very many signs that that's not true. Again, all these tensions that are out there, whether it's in Israel, whether it's with the fact that we don't have a Speaker of the House and all these other things, are certainly factors that come into play. But at least for now, with the continuing resolution that we've gotten, we don't have to worry about at least the domestic factors probably until we come into November. And I was just reading a couple of reports on that. Odds are pretty good. We're probably going to get a second continuing resolution in November that will push that out to the early part of next year. When the VIX is low, it just simply says that people are not worried that we're going to have a major, major downside move. And we haven't. I mean, even the kind of downside moves we've been getting, 3.5%, that's normal stuff in a bull market.
Yeah. No Speaker of the House. Who knew that would be bullish, Randy? All right, let's take our first break. Come back. We got a lot to talk about. We're going to talk about some EVs. We're going to trade Rivian. We're going to trade Tesla in the next 2 segments. Take a break. Alex Coffey, Randy Frederick coming back with more Fast Market. See you in 2 minutes, everybody.
All right, still waiting for a good setup here.
And that is Rivian, the smaller but significant EV car maker. And Alex, I'm going to come to you first. October 5th, Rivian sold off 23% in one day because they had a debt offering and they announced some of their numbers and they had burned through $1 billion in cash.
Groupon new lows there.
Here's my question.
But hold on to those puts.
Is the trading community getting this wrong on what Rivian's doing? Because it sounds like they need to raise cash and up production to become profitable.
So here's the issue with Rivian. It's either going to work like Tesla did, or it's not. It seems very binary. UBS comes out, says buy today, price target 24, basically say that they're probably not going to have to do this again for at least a year. But, I mean, I don't know that that's a positive. I guess it's not a negative. So that's one thing. The stock's been beaten down a ton. Obviously, the key distinction, though, that I think the problem is everyone wants to find the next Tesla, right? Because Tesla was a superstar investment.
And I hope it's not the next DeLorean.
The problem is Tesla did this when money was cheap.
Yes.
They also didn't have any. They didn't have another big firm that was doing the exact same thing already successfully. They sort of pioneered this space. But I don't think we can discount the fact that how much cheaper money was and how much more willing investors were to pay up for growth and the story that you were selling as opposed to the dollars and cents of the reality of your business. And the reality of Rivian right now is not a good one.
Randy, it says they lose $32,000 every car that they sell. Well, that's a scary statistic, but all it means is they need to ramp up production to get to get to profitability, correct?
You're right. And again, everything Alex said, once again, is very accurate. I'm an auto enthusiast. I follow the auto industry very, very closely. I have my entire life, but it's a very, very impressive vehicle. If you've had a chance to see one, I haven't had the chance to drive one, but I got a very good look at one of them, and I've read a lot about it. It is quite impressive. But what we have to remember is that they're not just competing with the likes of, say, the Ford F-150 Lightning or maybe the Tesla Cybertruck, if and when that ever comes out. They're actually competing with all of the existing trucks, and most of which are gas powered. And truck people are probably less likely to convert to something electric than car people might. But you're right. You can't deny the fundamentals. They lose almost $1 billion every quarter, depending upon who you ask. They're losing somewhere between 30,000, as you said, to upwards of 100,000 per vehicle. Now, interestingly enough, if you look at a company like Lucid, they're losing something like $300,000 per vehicle. So from that relative basis, it's pretty good, but it certainly doesn't line up well with somebody like Tesla. As Alex said, financing used to be very cheap. It's not any longer. These guys aren't leaders. They are innovative in the sense that they went to the truck market first, but I think it was probably because they probably figured they couldn't compete directly with the Tesla automobiles. But that's again a tougher market because of the loyalty. I mean, the F-150 has been the best-selling vehicle, not just the best-selling truck for something like 45 years for a reason. Those people are very, very loyal, and you'll see them defect occasionally to places like the Chevy Silverado or the Dodge truck, but the Ram truck, but not so much. It's a little bit tougher market, I think, to go to. So the fundamentals are there, and Alex used a great term, which I think is helpful to sort of understand the reason why I chose the trade example I chose today. He said it's very binary. They do have some cult following, like Tesla has had in the past. They do have an innovative product, but can they survive? I don't know. The stock moves a lot when earnings come out because it's such a big impact, and it's a very, very volatile stock.
Yeah, it's interesting, Randy, and I'm going to come right back to you on this. Ramping up production, borrowing money to ramp up production to get to decrease that loss per vehicle that they have. And remember, they've got Amazon money. It's not like they don't have cash. They went from $10.2 billion in cash to $9.1 billion in cash. So they've got plenty of money. I think they're just trying to race an uptick their production to get more profitable. Actually, Randy, interesting enough, they're made in downstate Illinois. And so you see a spattering of them around suburban Illinois. You're right, they are impressive looking SUVs. Now, Randy, your final thoughts on this, and you've got a trade for us in Rivian.
Yeah, again, they are very impressive, and they do have some deep pockets behind them, without a doubt. But not every company that starts out in that situation can sustain that for the long run. As Alex said, Tesla had a major advantage in that they actually created this segment. I mean, unless you think the Nissan Leaf was a competitor, I don't. Tesla kind of created this space. Rivian's coming in late to the game. They've come in when the money's a little bit more expensive and difficult to come by. But again, they have put together a very, very impressive product. But there are challenges as well. I mean, I've read a number of articles where if you park the truck for 3 or 4 days, it'll lose like 5 or 6 or 7% of its battery just sitting there. You know, to me, that's kind of like a car leaking gasoline on the ground. We wouldn't tolerate that. So I think there are still some little glitches and things that need to be worked out. And I don't want to beat up on them because, again, it is a pretty good product. So let's go back to what Alex said. He called this binary, and I was kind of thinking a little bit of the same thing. And that might be a good sort of choice of words to use. A strategy that involves means we're either, this thing could continue to melt down. It's only up 7%, which is not great year to date compared to some of these other companies out there. But there's definitely some following. But at the same time, things are getting tougher. As you said, they had to raise some capital sooner than anyone expected. What if they have to do that again? Those are the kind of problems we have to think about. So anyway, because this thing moves a lot around earnings, I thought it might make sense in this particular case to push our trade expiration out to the next earnings or beyond the next earnings date, which is on November the 7th. So that would be would be the November 17th, which is the normal November contract. And I put together basically an iron condor. And this is the kind of iron condor, not where you're expecting the stock to stay within a tight range, but one where you're expecting it to break out in one way or the other. And with this binary sort of stuff going on, as we mentioned, figuring out which way it might go is a little bit challenging. So sometimes you can put together a strategy where you don't care which way it goes as long as it goes.
Yeah, I think Ruben's going
Let's
BK.
sell the November 17th $15 put. Then we're going to buy the $17.50 put. Then we're going to buy the $20 call and then sell the $22.50 call. So what we've done here is we've created a bullish debit call
I'm gonna grab
spread
some
to
more
the
puts on
upside
this.
and
Mix
a
up the right shoulder.
debit put spread to the downside. And we don't care which direction it goes as long as it goes a lot in either direction. In this particular case, you can do this trade for about $1.40. Because it's a 2.5 wide spread, that gives you $1.10 potential max gain. So your cost is a little higher than your potential max gain, but that usually means your probabilities of hitting that max gain are much higher. And then this one sets up with break-even prices at that price of 140 of between about 16.10 and 21.40. So we're going out again all the way to the November expiration. So that's quite a bit of time. We're going to get an earnings report before that time. And we've got a pretty wide range here, but we're looking for a big move to the downside or a big move to the upside. Obviously, the ideal scenario is we want it to be below 15 or above 22.50, so it's completely in one direction or the other with a max gain on one of those two sides, one of those spreads.
Yeah, 38 days till expiration, Alex. A long iron condor, one of those. Sleep well at night as long as you think the stock's going to move. You don't care which direction. You're spending about $1.40. That's the risk on the trade. The debit spent with a chance to make $1.10 if it were to go to full value. But that being said, you've got time. You've got duration on your hands here.
Yeah, and because there's so much duration and because you have that calendar event, you can create a scenario, not saying that this is something you should plan for, where, hey, a couple more days like today, this stock moves higher. You could consider separating this in, take maybe the call spread off.
Sure.
And then earnings is disappointing and it collapses back down, and you could maybe be profitable on the put side. So like you can create a scenario where you get movement in both directions in a name as volatile as this with that much time on the calendar. Of course, look, you're just looking for any type of movement at this point, and if you could get that to take place because of earnings, I think that's great.
Yeah, this is one of those trades that looks for movement, right? We talk about range-bound strategies all the time. You don't care how far this goes, as long as it goes outside of your long strikes, right? You've got a vertical spread on the upside, a long vertical put spread on the downside. All right, great discussion, great trade, Randy, and great discussion about autos. I didn't know you were a car guy, Randy. That's good to know.
I definitely am a car guy.
All right, great. All right, let's take our next break. Let's say goodbye to Randy Frederick. Thank him, as always, for coming on the show. Let's take our next break, come back with our Lightfolio segment, Cash Tags. Randy Swan's going to join the show to talk about another EV player you might know, Tesla.
Another break there. Dang, dude.
Down to kind of no-brainer levels from a competitive standpoint. You know, they've got the base Model 3 sedan now is at $39,000 or under $39,000, you know, which is $9,000 less than the average car purchase price in the United States, and right there with a Toyota Corolla in terms of, you know, from a competitive standpoint. All of a sudden, what, you know, 4 or 5 years ago was a luxury kind of neat to have gimmicky type of thing to own a Tesla, and it was very expensive, is now, you know, right there on par with buying a Toyota Corolla. And who would have thought that we could get there? You can see the drastic price cuts that Tesla has been able to put out there really matches up really nicely with the cost of ownership. You know, interest rates have gone up considerably, so leasing or purchasing a car on a loan has gotten significantly more expensive. And so what Tesla has done is combated that through price cuts. And I think they're going to be able to maintain their margins while they do that. And the response from the consumer that we've seen to these price cuts has been extraordinary. Web visits to Tesla.com are up 59% year over year to all-time highs. This is a massive, massive move from a company that gets most of its purchases through online channels, especially Tesla.com. So seeing those web visits at all-time highs in reaction to these price cuts tells us Tesla is creating basically a one-horse race and expanding the lead in the EV market, and now is just becoming a matter of time, we think, before it's just the dominant automotive company, period.
I love the points, Andy, and you can feel the pressure being exerted from Tesla right now, making these decisions to move prices lower from strength, not necessarily from weakness, although you'll read that they're trying to spur demand, but your data certainly suggesting different. I've read a lot about them maybe deploying, and they've been disruptors in many ways in this space, and the model of which you do business with them, very different than traditional autos. But this idea of the razor blade model, do you see anything in that where they're not necessarily even seeing the car possibly as the driver of actual bottom line earnings, but rather all the things that you can add to it, all the technologies they're working on, and this becoming more of almost a software or service-like company in the long term?
Yeah, you can really feel that. I feel that as a Tesla owner. When you get into the car, every couple of weeks, it's downloaded an update that makes your car even better at driving 79 miles an hour through traffic and going, off the exits at the right time and making the turns all on its own. And I just think to myself, if a company can pull off that with me, and my family sitting in the car and do that safely, then what can't they achieve from a software and artificial intelligence perspective? So I really think of Tesla as one of the biggest, greatest artificial intelligence plays there is. The computing power that they're amassing, the data that they're amassing, pretty much unrivaled among certainly any automotive companies. It could be unrivaled across the world, except for maybe Microsoft and Google. I think your point is well taken. There's rumors, that Elon Musk may roll out a smartphone at some point. He's got the satellites in the sky. He owns the world's largest real-time, conversation network in Twitter or X. And so you kind of can see where this could go a lot of different directions. And you could see, a scenario where actually the car becomes, that first hit that gets people into the ecosystem, much like Apple did with the iPhone. And then, Tesla, X, whatever you want to call it, all becomes one big software as a service play. I could totally see how that could happen, and I wouldn't bet against it in any way.
Andy, the drum I beat whenever we talk about Tesla is the pipeline, right? And Cathie Wood came out with a statement that is quite incredible. She said by 2027, their move into autonomous driving, right? They'll make more money from autonomous driving by 2027, not that far away, than they do from EVs, with margins of over 50%, Andy. Like I said, what would frighten me if I was ever a Tesla bear would be the pipeline and what's next and what's coming. Yeah. Like the robo-taxi, right, which is supposed to dominate their earnings in the future, Andy.
Yeah, I think Cathie Wood is I think she has excellent visionary qualities. I think her date may be a little aggressive. I'll tell you, as someone who uses the autonomous driving of Tesla all the time, I'm constantly having to turn it off in certain situations, certain weather conditions. It's making leaps and bounds of progress, but the idea that people will be getting into these without anybody in the driver's seat just a few years from now, I think is very aggressive and very optimistic. But I do think it will happen, and I think that the trajectory of the prediction is correct. And so you think about that, you think about the AI infrastructure that they're building, the computing power that they're building, the mapping technology. There's a lot of ways for this company to make money that don't rely on selling a car for more than it costs to produce. And they're even winning at that. And so I think from a long-term perspective, this is kind of one of those companies where I think the Tesla Q folks have folded and are out of the game at this point, I would at least hope that that this is either, you know, I'm in it because I'm bullish, or I'm waiting to get in it because the price could drop in the near term. But I think those are the kind of the two only you know, acceptable outlooks, at least from a Likefolio perspective.
You know, Andy, that kind of goes along the lines of sort of my final comment / question for you. So one of the phrases I heard when I first got in this business is never fade a superstar. That doesn't stop at just trading or investing, goes to sports and everything. Yep. When you're looking at this, I think it's hard to not think of Elon Musk with that entrepreneurial mindset, that willing to disrupt, is anything other than a superstar at this point when it came to what they've created at Tesla. But as an entrepreneur yourself and someone who's constantly looking at ways to disrupt it and think outside the box, is there any other company that's achieved this level of scale and size that still thinks that way on a daily basis?
Us from trading.
But Apple's still such a machine, and they're
Thanks
doing
guys for your likes, for 13 likes on the day.
It doesn't feel like they're
Maui
changing
Sam,
the
thanks so much
world
for your donation,
anymore.
man. So
They just
generous.
impact the world.
Appreciate
Tesla
it.
Seemingly is
What
still
kind of words?
changing and disrupting on a daily basis.
Yeah, I don't think we've really seen, you know, and I think Apple, when, you know, when Steve Jobs was still at the helm, felt that way. I think there is a connection between having the founder, or at least, you know, in Elon's case, the very early, you know, kind of lifetime CEO of the company, still involved and still with that visionary spirit rather than the financial, you know, implications type of methodical approach that you're talking about. So I don't think that we've ever seen a company that got to these levels that still had that, you know, inquisitive, optimistic, change the world type of founder mentality since we had Steve Jobs at Apple. I think that's the best analogy I can come up with. And I agree with you. You don't bet against Tesla. Look, Tesla's a very volatile stock. So the idea that it could fall 40% over the next 6 months is very, very real. So people need to understand they're still taking a considerable risk buying Tesla at any price level if their outlook is near term or if their exit is near term. But I think long term, if we look at Tesla and think, hey, anytime I see 40%, 30% off of highs, you know, I might dip my toes in and buy a few more shares. I think it's probably a good overall outlook.
Yeah, you know, it's interesting. Changing the world has growing pains, right? And if you and Tesla is so far ahead of everyone else. And I got one 2-word example: charging stations, right? They are the clear leader, where now the legacy automakers are using Tesla to charge their electric vehicles. It's nothing short of spectacular. Andy Swan, thanks for coming on. I knew you'd deliver the goods, Andy, today. Thanks for coming on as always. Have a great day.
You too. Appreciate it.
Yep.
Good morning in Fula language.
Now get into a trade in Tesla. You know, Andy's right. This stock could move in either direction, $30 like that. It often does, frankly. It's on a little bit of a run right now. It's made a pretty nice comeback here last couple of days. Give us the paper money example trade that you're thinking of.
Yeah, first off, Kev, I mean, we have earnings 8 days from now, next Wednesday.
The 18th.
I think in the case of many traders and investors, this is kind of an awkward period of time. But there are at least two, there's probably more than this, exceptions that I could say that would I wouldn't maybe wait.
Yes.
First off is, if you have a directional assumption, and let's say that it's a bullish one, which ultimately our trade illustration will be, and you think the stock's going to move higher between now and that earnings event, this would be potentially a more favorable time to put on that trade. The second would be you have some sort of long-standing position, and earnings is just a necessary evil, if you will. And so outside of that, coming from the position of maybe you're establishing a position, you have an opinion on the stock, you think it might move higher, and you're worried that it might move even higher between now and next Wednesday. Today could be an entry point kind of a day going into that earnings event. And so I structured a strategy that I think is seen as an earnings strategy. It's just being put on a little bit earlier. And so, Kev, what I did is this sort of in your wheelhouse of strategies that
Spice come down a little bit.
We're doing a week-over-week calendar, but we're selling
Gonna
next
get someone
week,
to raise
so
here.
that'll capture that earning event within that short-term
And it really
premium,
slow.
and then we're buying the following week. So I centered this around 300. Well, for a few reasons. One, this is essentially where the stock had failed before.
Yes.
So if you see that former resistance level is possibly an area to target, but then also because it's a relatively round number, and also over those next time frames, market maker move about $25.
Yeah, they had nothing.
Maybe
I could have got more if I
17 days from now.
You
kind of, if you're buying premium, have to play for an outperformance of that. And so thinking that 25 is not enough in this case, that you'll actually see a bigger move and possibly a retest of that level. But most importantly, by selling that short-term premium and buying that longer-term premium, it brings down the debit spent to just $1.15, which is $115 in risk. But in a name like Tesla, with as much implied volatility and a stock price over $250 a share, there's not a lot of option strategies that are going to have $1.15 in risk. It's just, quite frankly, it's the nature of the game when you're playing a name like Tesla. Options are just a little bit more expensive than other names.
Buying the Oct 27th 300 call, selling the Oct 20th 300 call, right around $1.15 debit on this spread. That is the risk on this trade, is what you spend. It's a 1 weeker, so you really can't roll or extend duration, but for a move like this in Tesla, you're right. The expected move, the market maker move, you can throw them out when it comes to this name. It's part of the question, not part of the answer. You're collecting theta, you're long about 2.5 deltas. All right, let's take our final break and come back with a market update from Ben Lichtenstein. And then we'll cover Northrop Grumman.
This isn't looking very bearish yet, actually.
Another defense contract. We're doing it 2 days in a row. Take our final break of the show. Come back with more Fast Market. See you then, everybody.
Fortunately, my dailies are just dailies, so yeah, we'll see about that. Raise half pot. GNS came back down. It's up to 2.8 now. 12% on run, 12% on 1.5 on rad, 7.5 on space.
down about 8 or 9% on a year-to-date basis. It's catching a bit alongside the other defense names, but the estimates, if you look at it from a sales standpoint, are expected to be in the mid to high single digits for the name. And last
Catch a
year,
pole bender?
based upon the last 4 quarters of underperformance, you can actually see that earnings actually contracted by about 12%,
Thanks, Maui.
but they're actually resumed to
About the family?
to grow their earnings on a forward basis. And I think this is an interesting game that, like I said, is very well positioned across multiple technologies and, of course, hardware and infrastructure for the military space.
Yeah, George, from a technical perspective,
I
you're
love-
right. This chart
Lovely
looked
family.
great until yesterday,
Very
when
close.
this stock shot up through the 50-day moving average, through the 200-day moving average, and now has clearly broke out and is down slightly today, but holding those levels. George, does a stock like this, I guess this is one of those uncomfortable conversations. Do they do better
This is my concern
in a
right here.
long, drawn-out war other than a short war? Because there's a war going on in Ukraine and Russia right now, yet over the last year, this stock has underperformed.
Yeah, I think this is it's a good question. I think at the end of the day, you have to look at the political gridlock that's going on in Washington when it comes down to all spending. I think at the end of the day, there's going to be additional spending from a defense standpoint that may have not been there based upon some of the constraints we've seen in the last few months with the budget. So I think that's a huge catalyst for this entire group, including Northrop. I think if you look at the forward multiple for this company, it's trading above its 5-year average, and that's a function of lower earnings estimates, which I think will probably be adjusted as we move forward into the fiscal year budget reconciliation, which we know was passed in terms of the stopgap until mid-November. We'll see if it actually holds in November, if they actually move on defense spending. Because I think this narrative around what's going on in Israel is going to change the dynamic for U.S. contractor defense spending, and that's really key for this company. So whether it's a short-term or long-term drawn-out war, either way, I think there's going to be quite a bit more spending from a defense standpoint, and that'll benefit this group.
George, thanks for coming on as always. Day 2 of covering our defense contractors. Have a great day, George. So the final trade for today's show, the paper money trade, it doesn't reflect any opinion, right? It's in paper money.
Pocket nines, you have
it's
nothing.
An example. But if you look at a company like this that may have a bullish tone
wives?
for
How many
the
children?
near future, one way
wife.
to do that is to drag out a calendar spread.
Happy-
and so what I did here
happy
is I
amount
went
of
to the
children.
November 10th. So again, when you think about November 10th, you're talking about 31 days, so a month. What's going to play out over the next month? Then I sold this week's October 13th, and then the 480 call calendar.
Just one
That's
wife,
trading
though.
About $6. It was trading about $8, but here's the thing. Be careful here, because this is not the most liquid name. The markets are a little wide. The stock trades at a high
broke out
level,
up
high
there.
price. So the markets are a bit wide. Make sure you have the liquidity that you need to put this trade on. But this gives you several chances to extend duration. Remember, the risk on this trade is the debit spent, $6. Remember, that number is moving all around. If you unleash it, now it's trading over $7. So it's a little bit illiquid here. So if you're going to trade this, be careful with the price discovery that you use, right? Everyone understands a 1-month call calendar and what it can do. It collects data. It's long delta, but make sure you understand getting in and out of a trade, and the slippage might be just as important as the strategy you choose or the pricing that you use for that. So that's our trade for there. Make sure you understand all the things compared with liquidity in a name. All right, that's our show for today, everyone. Thank you so much for joining us. Alex Coffey and Jenny Horn are coming up next.
I'll have
with
my,
Next Gen Investing.
my little
For all
boy.
of us here at the Schwab Network, have a great day and a great afternoon. We'll see you tomorrow with
Good
another
night
edition
before he takes his
of
nap.
Fast Market.
Around. Oh, it's a fake. It's a fake. 1 o'clock chop. I got back into the puts. Need more kikis. Thanks, Maui. Yep, we've got a good amount of children. But yeah, I agree. I agree. Oh, look, you can't even look at barbecue anymore. Interesting. On-road hanging out at the highest, 12%. Base back down to VWAP. AMC up just 1% now. And GME 3.5. Rad breaking out there. 16% on it. Still a little uncertain of this. Could still just be liquidity being built for the bulls. Still no docket? Were you pretty hopeful for one today? Rad, going 17, 18%. Oh my gosh. I didn't realize how much time I got on these calls. January 2025 is 465 days. Guess I could sell some spreads on it. See if we get a break here. Queen, the Ace King Magnet. %17 on Rad. Whoa, whoa. Flush. What the heck? What in the world? Is there news? That was crazy. Almost to VWAP. Look at that. That was insane. That seems like news. Wow. Wow. Closing a couple here. Still going. That was crazy. Still red on the trading account. Not enough of a move. Figure out if that was news or not, 'cause we might get a big bounce from it. I don't know if I want to cut the loss on these or not. Oh, you had your break. This is my first, maybe last take profits, and then really this channel right here. But if we break that, oh, you can see a full inverse cut being built today, maybe. This looks like news with no one's speaking. Block? No. 3-year note auction. Oh, the bond auction. Maybe that's what it was. Wow. Just in one bullish trend, we might be. Back down to VWAP. Break this channel. Yeah, it must have been from the bond auction. Easy. Hopefully someone has a straight. Oh, no straights. Nice, he's a straight. Oh, pair of sevens. Okay. Didn't really affect GME or AMC or anything. Apples. Yeah, I think it must have been from the bond auction.
Download the
Shoot. Break VWAP. There's a break of VWAP. Oh, more fleshy. Bottom of that channel. Sell a few more here.
So these gaps, it can be very useful to follow them, keep track of where they are on your charts because they can act as support and resistance levels. Gaps oftentimes get filled too, so I would be very curious to see if this trend deterioration continues, if we do make our way back to that area just below 17 where the gap originally opened up. But overall, still kind of sticking within the boundaries of this more triangular shape here, Jenny.
So as far as momentum of the trend, what are you watching in terms of RSI, of course?
Well, taking a look at RSI on this name, our measure of momentum here, I thought it was kind of interesting. We formed a floor near the 35 level. You can see this green dashed line here, and it was interesting because price kind of wasn't cooperating with us either way. You can see that when we formed the lows here, that was around where we had our price, near about the $20 mark or so. Our next lows, were a little bit higher than that. RSI bottomed out at the same point. Our next set of lows were lower than our original lows. You can see we were even further below that point here. RSI once again held firm at 35. So kind of a odd situation here. Momentum hanging on above that oversold area. That would be a further bearish signal if we were to slip below that level. I would keep my eye on that 35 level on the RSI. If we were to break below our trend line and break below our gap level, it would be really interesting to see if RSI also broke that 35 level, especially if we further continued and broke through into the oversold area. But for now, I suppose you could call it a little bit of divergence to the bullish side here, given that momentum is not falling apart as price made a move.
My trading account has been given a
So
gift.
that is one thing to be a little bit optimistic about.
Gift.
But as far as support and resistance, what are you keeping on your radar here? This chart is like, I completely agree with what you said. It's a difficult chart to piece apart because we have so many gaps.
Yeah, gappy one.
I went heavy on those puts too.
Volume profile sometimes
That's another
shed
gift.
some light on things
Up here.
It's not too much help in this
Closed
case,
out,
but
and then I bought
one thing
back in
thought
when I was a little
interesting is
fake
the
out.
volume profile point of control, this thick red line, was at the lows from the year, near just below the $15 mark here. So a lot of heavy trading around those levels. I suppose you could say we've got a little bit of a node right here between like 19 and 20. That's kind of a big range, though. I don't think that would be especially helpful here. You look for clear spikes that are much bigger than the surrounding areas. That's really how volume profile can help you find important support and resistance areas here. So we'll backtrack a little bit. We'll go back to right here, the confluence of our gap, where our gap opened up, and our trend
best
line
hand
right
out
around
there.
the 1780 mark. That would be a supportive point to watch. And then below that, near 1675, where the gap began originally. To the upside, I mentioned that death cross crossover recently here. Now we've got two moving averages that are right on top of each other, near about 2160 or so. So that would be an obvious resistance point to watch for in the short term. But in the longer term, we'd really want to see something move beyond this downward sloping trend line here. Probably around 24 or so would be the level to watch for that.
All right, really great breakdown on all things Rivian here that's fallen. I mean, it's almost 46% off its yearly high. So with that in mind, I mean, considering, Alex, I guess you could be making the case that things are pretty beaten up.
I might hold the rest till low day.
The nice rise today. you could be looking to capture some upside, just given if you believe that its valuation has reached its maximum depressed levels. So walk us through, with that mindset today, a more neutral to bullish strategy.
One thing that really stuck out to me, Jenny, is Rick had those two kind of converging trend lines, one from the up that was sloping downward and one that was sloping upwards from below. If you just kind of looked at that and said, even if these hold, at some point they're going to cross over each other, and this is going to have to break one way or another. What I also noticed
needs
was
low of the day, I
that point
think.
at which they'd be slated
No,
to
you need more than
cross
low of the
was
day. You got those
after
puts ready to
earnings.
open.
So I looked at it as maybe that pattern holds intact.
Need a big
maybe
flush.
the resolution of it is after earnings, and we just stay ahead of earnings and hope the stock kind of stays within this range. Looking at a neutral to bullish trade illustration in Rivian, selling the 19 put in that November 3rd weekly cycle, buying the 17, looking for 30 cents on the dollar in risk. Well, it's a $2 wide spread. 2 times 30 cents gives us 60 cents as a credit, which means $60 in max profit. To find that risk, you simply take that $2 net of the 60 cents. You're left with $1.40, $140 in risk. Break even, subtract 60 cents from 19, you get 18.40. Straightforward, elongated Z risk profile. Anything above 19 at that expiration, max profit. All the risk below that, below 17 is max loss. Again, make 60, risk 140.
Okay, really good breakdown on Rivian. Now to shift gears, but not too far, because it's another name that's been met with some pressure. Its own headwinds specific, though, Rick, that's GM. GM does have earnings on Tuesday, October 24th, before the market opens. But until then, what are you watching in terms of the trends here?
This is another interesting chart. We've seen some wide swings to the upside and the downside, kind of chopping back and forth between the above the 40 level all the way down to the 32 level. So many upswings and downswings here. But the 32 level is something that caught my eye here. That was about where we bottomed out many times here. In terms of closing prices, we had made some intraday moves below that point, but we spent very little time below that 32 level in general here. So that was a point I really had my eye on. We fell below it pretty steeply just recently, kind of a rough break downward. It reminded me of what we saw here when we crossed below the 36 level. That was about where we topped out there and bottomed out there. So that's the kind of price levels you want to look for. Frequent stopping points for price. You know, that was an
I want to just get out of my trading account once it's green.
If you were bearish, perhaps you
Not
would
risk it.
put a sell order below the support to be broken, or you would buy a put at that strike price, or whatever. You know, that's why we look for these key price levels. There can be energetic breakouts when they're breached. It happened in this case, and it happened once again in this case here. Now we find ourselves in the position where we just recently made yearly lows again, below the $30 mark. We had a steep downtrend, and we crossed through it to the side. We didn't really get a huge breakout to the upside. Now we're trending down once again. It was looking like perhaps the situation was improving, but the other shoe kind of dropped once we fell below that 32 level. Now we're finding ourselves trying to play catch up and fight our way back up.
Oh, because the second pair was the kings.
Which now becomes resistance.
So now, as far as momentum of this trend goes, like you said, we just recently touched new lows. So what are we watching here?
Well, looking at RSI, we can see that we had a situation when price was making some highs here. We weren't really able to cross above 34 very convincingly here. RSI was similarly struggling. We were not able to break above that 50 midline here. So that's a key point to watch, is that midpoint on the RSI. Remember, RSI only goes from 0
is
to
it
100.
Biden speaking?
The key areas are 30, which is oversold, 50, which is the midpoint that separates bearish and bullish from each other, 70 is overbought.
You like fall off the stage or something?
The key things to keep in mind
get back up
using this indicator.
And now he's
we
up.
did have a little cross below that 30 level just recently during our downswing. We made our way back out of it here. However, we have this downward sloping trend line on the RSI to consider as well here. RSI, you can use trend lines and support and resistance similar to price here. It would be interesting to see if we were to break above that trend line, as well as to find price make its way back above the 32 level here. That would be an interesting thing to keep an eye on here. It can be useful to try and use these trend lines. We have kind of a similar shape here. We have a downtrend in price and a downtrend in RSI. Wait and see if one of them breaks first, and see if the other indicator or the price follows suit. It can be interesting to watch if RSI has a breakout before price. It can be a clue of an impending rise in price as well.
So now, as far as some key price levels you're keeping on your radar, walk us through what you're thinking here.
Well,
You guys are tilting.
as I usually do when price is making new yearly lows or highs, I include standard deviation channels. We have our blue
Full
linear
house.
regression line, our line of best fit based on closing prices. Then we take standard deviations above and below that to try and help extrapolate where we could find potential support or resistance. The -2 channel comes in
Jeez, I'm getting so many good
here,
hands.
just above the $28 mark. That would be a notable decline in this name here. That would be kind of rough for the bulls, but that would be where the study comes in. That's where you might look for some potential support. Our -1 channel, we're right around there right now. That comes in around the $31 level. As I said, 32, green dashed line, frequent bottoming point for price. That's where we would want to fight our way back up if we were bullish. So that would be some areas to watch, I would say. Really, we'd want to break above this trend line as well, too, for some kind of resumption of bullish activity.
Resumption of bullish activity, I think that a lot of these auto companies are hoping for that. But great breakdown on both of these names. Rick Ducat, our chart master. So now in trading this name, Alex, obviously a different chart, but similar weakness that it's been met with over the past couple of weeks and months, really, especially in the last couple of weeks for GM, though. So walk us through then a trade that, say, perhaps you're looking for a resolution to a lot of these strike headwinds. You see that outcome coming soon in an optimistic fashion. You're bullish on GM for example purposes.
Yeah, very few things in common as to what's impacting these two stocks, but you mentioned one of them. The strikes looming seem to be what's in focus for a name like GM. Earnings are slated for the week of October 27th in terms of options expirations, so I stayed above that. But say you did want to look for something a little bit more optimistic, a little bit of a bounce back in this name, kind of in line with some of those analyst notes.
Respecting our channel here, like perfectly.
Buying one in the money, selling one out of the money, 31, 32 in this case. 50 cents, half the width of the strikes, break even 31.50. If you were trying to think between now and then, so now and 2 Fridays from now, what could make this stock go higher? Well, one key, easy, I think, one to consider that could be a positive catalyst would be resolution to strikes. And you could also make an argument that it's in the best interest of a name like GM to get that resolution before earnings, so you don't have to talk about this your entire earnings call. So I don't know if that's going to happen. They got a lot of things they got to work out, but you can come to an explanation or a narrative in which that is a reality. This is a trade that would seek to capitalize on that if that were the case. And so 31, 32, call vertical in that October monthly cycle. Risk $50 to make $50 with a break even just above the current share
so it makes sense. He had a hand.
Yeah, and I think that you make a really good point. And for a lot of this, I think you'd want to be put to rest by then. I hope that there's a resolution by then. But of course, we will have to wait and see. Good breakdown on GM and Rivian, two names that have been met with some steep selling as of late. But now, coming up next, another name that has seen some weakness, but today's reaction to moving to the upside to their earnings, that is PepsiCo. Mixed picture from their third quarter, but all in all, Street seems to be moderately okay with their results.
Filthy. Okay, this is Oh, trips. I mean, if we make a full inverse cup today, that's still more of the move is in front of us. Oh, I should have raised. Might treat myself to a little coffee. I was up pretty early this morning. Like a good day for it. Have a flush? Yeah, what do you know? You have a higher flush? Probably. 10. Maybe a little head and shoulders being built here on the VWAP. Yeah, straight, yeah. Did you not realize or something? Jeez, this little bounce from here to here on these daily contracts is a crazy swing. 36%, 40%. There's just a lot of premium by the time I hit down here.
Or the one that actually is going to sustain that position. We've seen that over the years when it comes to certain industries that have been able to grow and thrive and see innovation. So I think that's something that we always have to kind of keep in mind. But yes, I think the market is definitely providing a premium for NVIDIA because the demand is there and they're able to actually start shipping these GPUs out into the marketplace. But AMD has been known in the past to be able to develop GPUs and develop packages and things of that nature that usually come at a little bit lower cost than its competitors and typically actually utilize a little bit less when it comes to electricity and heat dispersion as well. So that makes them a little bit more proficient or efficient when you're utilizing them. So that's really what they're known for, which is why we have also seen this kind of investor skepticism as far as trying to bring a product to market. Now they are expected to bring something to market in Q4, fully ramping up by the beginning of next year. But we will see how this is all going to pan out. Once again, they're going to be able to not only have this acquisition, but they're going to be able to utilize the open source field in itself to be able to develop on top of
what
Node AI is already
on the secondary
doing.
account.
So think about it as trying to
30 contracts,
additional developers by maybe not even having to pay that much and having outside hobbyists being able to check your source code. It's just it's a phenomenal strategy if you think about it. That's exactly why Linux Windows, which is an operating system, is also so popular within the computer sphere or within the technology space because it's free for the most part, and it tends to actually be a little bit more resilient when it comes to security vulnerabilities.
Yeah, I think that's a really good point. I think it's important to differentiate how they perform together, but also separately, like you did a good job laying out. But still good news, I guess, for AMD shareholders today, making more than a percent move higher today. Kevin Green will leave it there, senior markets correspondent for the network.
There.
Bring back in
It's punishing me to sell a few
Alex,
contracts and it'll dump.
Really on some of the price activity we've seen in AMD. I know this one we discuss on this show, but not nearly to the extent that we discuss NVIDIA, of course.
Well, I will say something. You guys both mentioned timing being important. I would say the timing of this announcement was important. Anytime you can say you're buying something and manage a stock price that moves higher on that day is a massive win for shareholders. Oftentimes, the acquisition of companies dilutes the position in some capacity because money's being spent, debt is taken on, equity's being issued as a way of raising funds for that purchase. AMD announces this, and the stock is seeing this as good news. I think everything Kevin said in regards to the kind of implementation of this software startup into AMD will ultimately we'll find out over time what it means. But you know, his point about being first, not always being the most critical thing, I think is important too. I mean, I look back to when I was in high school. The BlackBerry device was the popular smartphone of the day, and look at Apple now, and look at BlackBerry now. So it is important to be early and first, as Tesla has been in its space, but it's also really important to make a good product and do things well, and Apple's proved
Want
that.
some support on that?
That's
horizontal.
Such a good point. The BlackBerry was like the original smartphone almost, at least to my knowledge as well. It was the first phone I remember that had internet on it. So great comparison. But we'll shift gears here from all things technology and AI and focus on some consumer staples, specifically in the snacking world. That is Pepsi. As Pepsi did deliver, I would say, an objectively strong report, but did admit that there are some holes and some cracks, say, in the foundation now heading into the back half of this year and their third quarter, which is why we haven't really seen that strong of a result from the fact that they did, deliver a pretty sizable revenue growth, or organic revenue, which does strip out then their currency and merger impact.
Still only 130. We could fully make that inverse cup.
Rose about 8.8%
and
in
the handle.
third quarter, slightly better than the street had been expecting.
Yeah, this is looking good actually.
Also 15%. That figure also exceeded street forecast.
It's just like right near VWAP and this channel, so that's why it's a little unnerving that it's finding support, but makes sense. It wouldn't just flush through it.
Organic volumes were down 2.5%, meaning that revenue growth came entirely from some of their price increases. Now, when it comes to a lot of these food companies and some of these other makers of these everyday products, it seems like those that have exposure to those need-be products, like, say, paper towels or cleaning products, are doing a little bit better. As of Monday's close, actually, we had seen Coca-Cola, Kraft Heinz, and Colgate all had fallen about 17%, 20%, and 12% respectively now on the year. So these names that have more exposure into the grocery store per se, doing a little bit weaker, and Pepsi is no exception. One main concern among those investors and a lot of these shareholders and analysts that have voiced some of these fears have started to just say, look, consumers are sick of these price increases. They have such fatigue for paying more and more for items. Pepsi CFO did highlight this on their earnings call, saying that a lot of consumers now are trading down for cheaper items, but he did add that the things that he usually looks at with the consumer is to see if there's high stress. He said that right now sales at their convenience stores and food service locations are typically where people trim back, but they're actually still growing by double digits. So he did admit that he could admit some macro concerns, Alex, but said all in all, we're still faring okay. This message isn't necessarily dire. It just wasn't super enthusiastic.
You got to know what you're buying when you come to a company
the
like
flush.
this. I mean, this is a consumer staple. If you're looking at Pepsi as like
Queen
a
Eye flush too.
growth company, I think you're looking in the wrong place. What investors look for with a company like Pepsi oftentimes is consistency and yield. Well, on the consistency front, they delivered once again. This is their 19th straight quarter of EPS beats. There's not very many companies on the street that can say that. And so you look at what they have been able to do and where they were at coming into this report, and the narratives and the stories, to me, this was one of those like tremendous opportunities for investors on a short-term basis. We talked about it a lot. There was almost no bar that they had to clear, and you're looking at a company that has beat 19th straight times. Like, this was just, what was the negative news going to be? Were they really going to come out and say these dieting trends are making our business collapse? Like, if anything, you should have expected the opposite, and we got the opposite.
Right, and I would say this whole like I mean, I know there's like actual grounds to it, but the whole way that right now we're hearing so many narratives around these diet drugs, like Ozempic, for example, the way Walmart CEO last week said this is actually impacting the way that consumers shop. It's like, is that just impacting PepsiCo and Frito-Lay per se, or is it impacting every company that has food at a grocery store? I mean, that to me, that headline is ridiculous.
Or are you just struggling and you're looking for something to point the finger at? Like,
right.
It is possible that some quarters are just not a good quarter for Walmart, or just not a good quarter for Pepsi. It isn't because people are necessarily, and maybe I'm wrong, but I don't think I know a single person that's on Ozempic, and so maybe there's tons and tons of people on this, and maybe that's going to grow. But like, I don't know. These are just the layup kind of situations from my perspective, where the art of trading and investing comes in and passes the science of it. The situation was so negative in Pepsi, and they delivered positive. That's a recipe for stock price higher. But we looked at strategies throughout the week, and the one that we're going to look at in this one, oftentimes we're looking for a situation where the stock just doesn't go down. And that can be a strategy too.
And to your point, this is a consumer staple. So if you're looking at this move today, and even I was like, this is a modest move, but it's actually outside of what the options market had been pricing in from a market maker move perspective. So this is pretty much exactly what the street, even larger of a move than what the street had been expecting. So that's still a move when looking at a staple. I mean, 1.5%, almost 2% move higher here is nothing to just write off. So trading this name, Alex, like you said, utilizing the fact that maybe shares just won't go down. If you're thinking that way, obviously, then walk us through a more bullish leaning example trade.
Yeah, I looked at something that went out a little bit further in time. This may scare you, so you got to cover your ears. We're going out to December, no earnings to worry about for a while. Looking at buying the 160 call. But in order to reduce the debit spent on that in-the-money call purchase, we're looking at selling the November 165. That is just barely out of the money. Now, before the show, this package was trading for around a $4 debit. If I add $4 to 160 in December, that break even is around 164. Well, right now the stock is trading higher than 164. So you have a break even that's around the current share price, and it's a strategy that can benefit from sort of the stock hanging out here or potentially moving higher. You can see the risk profile. It looks like a calendar spread because it has that horizontal time spread dynamic with the November option being sold and the December option being purchased. But because they're at different strikes, and because the one we're buying is a larger option, what you can see are a lower strike price on the call side. You can see it's tilted this calendar spread on its axis to remove that upside risk. So with this strategy, Jenny, this is sometimes referred to as the poor man's covered call, because you're buying that call option in lieu of being a shareholder, in lieu of buying shares to go with that option that's being written out of the money. So poor man's covered call, the call diagonal spread, looking for sort of a modest grind higher in Pepsi over the next month.
Yeah, and Pepsi, I mean, it continues to sort of stabilize and even move higher here. So again, it's not like it's making no move. It's still definitely making a 2% move to the upside. We'll leave it there for FOMO. Now coming up next, we are looking at Alphabet shares with a modest move to the upside today, up around 0.5%, with some bullish analyst activity driving Alphabet shares to see continued outperformance now on the year. Jeff Pierce will have more on that story for us coming up next.
Buy rallying up there a bit. I add back into my puts. I added some puts there. Maui Sam. Good night, Maui Sam.
Can't hear you what?
Good night, Maui Sam.
Maui Sam?
Yeah, Maui Sam.
No.
Say good night.
Good night.
Maui.
Maui Sam.
Okay, that's nice. Money coming down there. There's your flush. Wow. Breaking the channel again. Yeah, we might see low day. Might.
Kind of ancillary security business that was all the focus a year and a half ago.
Oh.
Well, I think the focus in the entire industry space is really network and security. I think that's one of the challenges Juniper is facing with their breakdown. If you look at the breakdown, for instance, of Cisco systems, over the past couple of years, they've grown their networking and security business as a percent of revenue quite aggressively.
Got its claws on
relative
it.
to product sales. I think when it comes down to network gear, you
Oh
know, a
my.
lot of the gear now has become more commoditized. There's still a lot of growth, there's no doubt, from the standpoint of data center networks and artificial intelligence demands on high-speed networks. But I think what's happening here is that enterprises like the full-fledged package of network security protocols alongside the labeled network gear. And I think that's one of the challenges Juniper Networks has always faced. They have their network business. They also have, of course, a security business, which isn't growing as fast as, let's say, Cisco. But at the same time, the revenue breakdown in terms of hardware sales is still a high percentage. So I think that's one of the reasons why this has been an underperformer in the past year or so. I mean, if you look at it relative to the other names in the past year, it's relatively flat. The other names in mention have been higher this last year. And if you look at the growth estimates for earnings for Juniper and sales estimates, they're both about 5%. So typically speaking, you'd like to see earnings growth grow faster than sales. That's been a challenge for Juniper, but if you look at the news headlines as well, they're kind of giving
Not sure if we're gonna get this
that
move today or not.
margin growth is really struggling because they're laying off workers as an announcement. And generally, that's the first step a company will take to improve its bottom line margins. And I think that gives you an idea that there's some structural challenges with the company right now. I'm not saying it's a bad company. What I'm saying is that their growth relative to other competitors just isn't there.
Yeah, and I just think a lot of that
I
has
still
to
have
do with the fact that
0.73%.
they're
That's
still
crazy.
sort of operating in an outdated world. Not to say that their technology is all outdated, but you
Ah,
have a name like
should've
Adobe
closed
that's
the trading
pushing more
account when it was
software.
green.
It's paid off. Obviously, different companies.
I'm
but
too
something to
excited.
consider, obviously,
That
for
flush, I
Juniper
don't
down
know
the
what that
road.
was
We'll
from.
leave there. Really great breakdown on all things Juniper Networks
What
today.
was that?
George Tillis, senior markets contributor here for the network, and that also does it
The
for Alex and
105.
myself for Next Gen Investing for this Tuesday. Coming up next, we have the watch list with Nicole Petalides.
What news is then? Oh, yeah, might have just been the bond auction. Yeah, almost 4% on GME still. Of VWAP. 0.75 on AMC. Oh, look at Joan. Oh, wakey from Joan, 13%. look at that Head and Shoulders we're building. BEA beautiful. Okay, let's see if we can break this. Excuse me. 2 o'clock, ready for the VWAP dump. Drop chop.
For some of the biggest stories in the markets, we welcome in Caroline Woods, senior markets correspondent here on Schwab Network, taking a look at Palantir. Now, Palantir stock is climbing. It's up about 1.5% today. A big contract win, too. Tell us all about it.
Yes, and this sticks with your AI theme that you were talking about earlier. Palantir adding to yesterday's gains, now up about call it 8% on the week, only up about 1.5% right now, was up double that earlier today, so already off the highs, but still holding on to some green arrows after getting a new contract from the U.S. Army worth upwards of $250 million, and it's to scale artificial intelligence and machine learning capabilities. The contract goes through 2026. It will provide additional capabilities to support the combatant commands, armed services, intelligence community, and special forces as they test, use, and scale both AI and ML capabilities. Palantir, of course, has partnered with the U.S. Army since 2018. Its president said maturing new concepts for how we deploy solutions in different contexts is key to maintaining our nation's competitive advantage, and we appreciate the opportunities to support this mission. So Palantir shares, of course, have been riding the AI wave. They're up about 180% year to date, 122% over the past year, but I think context is good. Still only, half of what it was trading at in early 2021. And something that I did note with Oliver this morning is that it's actually trading above its median price target right now at $15.50. trading at 17.89. So it'll be interesting to see if analysts catch up or if maybe it could be running out of steam because it's seen pretty impressive gains.
So that's some good news there. I mean, we had on some guests earlier today who were talking about tech overall and just still seeing upside potential going forward. So that would be good news for not only Palantir but also AMD, which you're covering here today with an AI acquisition and a real winner. I see 1 year it's up 86%. AMD has been an incredible performer. But what's the news today?
Yeah, AMD is stepping up its AI game. It has to keep pace with NVIDIA, which AMD is, you said, up 88% over the past 1 year. It's up about 68% year to date, which really pales in comparison to NVIDIA's 200+% gain. But it announced it's acquiring open source AI software company Nod AI for an undisclosed amount, but the acquisition will help expand its AI software capabilities. AMD expects that the acquisition will bring an experienced team that has developed an industry-leading software technology that accelerates the deployment of AI solutions optimized for AMD Instinct data center accelerators. So Nod AI delivers these optimized AI solutions to top hyperscalers, enterprises, and startups. And its technologies are already widely deployed in the cloud. The company said at the edge and across a broad range of endpoint devices today. So it's giving AMD shares a boost today. They're up about 2%.
Gonna close more contracts at
BWAP.
BWAP.
As I said, up about almost 70%
the bottom of this
year-to-date.
channel.
But some may say, if you've seen
Whoever
some of
comes
these
first.
other AI plays, there could be more room to run. So let's see what they're saying about AMD.
Without a doubt, we have not seen AI realized in any way, shape, or form. All the guests who come on, if they're not picking NVIDIA, because NVIDIA, to your point, up 200%, but that there's so many
Sorry to hear
other
that,
ways
Bubba.
to play it.
But it's interesting because, I was looking at the analyst breakdown for NVIDIA versus AMD, and NVIDIA has 51 buy ratings, 2 hold ratings, and 0 sells. And then for AMD, there are a few more in the hold camp.
Closing
34
5 there.
buys, 12 holds, 1 sell. So given the fact that NVIDIA has run so far so fast, the fact that majority of analysts still very much in the buy camp, and still pretty bullish on AMD as well. I mean, median price target of 140, so that's what, call it $30 higher than where it's currently trading.
All right, and we're going to talk more about this later too in the show, and Microsoft and
Too
its
high there
AI
on Rad,
exposure,
breaking
and
out.
really,
Plus 20%.
Morgan Stanley saying that it's been a positive in building investor confidence in that name. So we'll talk about that. Caroline Woods, thank you. Let's take a look at the bigger picture. Alexander Reed, Chief Investment Officer.
I mean, that selling is aggressive, though. If that turns back on,
So,
definitely be at low of the day in a hurry.
to Fed speak and all the things that we're watching, but just your big picture on the action that we're seeing in this market and the resiliency, right? You're seeing them buying the dips. Your thoughts?
Yeah, thanks for having me, Nicole. So last time we were on, it was right before the last Fed meeting, and we said the Fed should probably hike. They didn't, but the bond market ended up raising and hiking rates for them. We've seen the 10-year move up prior to the last 2 days. 50 basis points over the last 30 days. And that's just highlighting kind of the conundrum in the marketplace that we see today of, the markets and the economy is just being really good for a lot longer than what the Fed was expecting, a lot more resilient to your point. During that last FOMC meeting, we saw the median expectation for rate hikes maintain a rate hike by before the end of the year, with just 50 basis points of hikes for next year, down from 100 basis points. And I think this just, this ends up coming to this week, a big week with PPI tomorrow, CPI on Thursday, and we'll really see proof in the pudding whether inflation continues to go down or not. We see a lot of Fed speak recently, just in the last 48 hours, of saying, rates have done the work for us. Maybe we can pause at this point. We think it's premature to suspect any rate cuts.
If you zoom out, it's a beautiful head and shoulders.
And we would support the idea of pausing more so.
Not to say you can't
if
hold
unemployment
this
was
channel
looking
and break
more
out,
shady,
continue
right?
this
They have 2 main topics here.
uptrend.
The 2 main targets.
If it holds some
maximum
resistance here,
stable prices.
probably see a flush through VWAP.
Rate and unemployment claims continue to fall week over week for the last 2 months. That's not indicative of a breakdown in the labor market. We saw job openings kind of surprise to the upside, and that took yields higher a week and a half ago. So we think that it gives the Fed more time and space to see inflation come down. Inflation's down at 4.2%. We'll see maybe headline inflation accelerate again due to the commodity rises for September coming through tomorrow, and PPI and CPI on Thursday. But we think that the market's a little giddy on a lot of this Fed speak recently, taking the buying opportunity in tech, communications, financials, industrials, and bidding that up, because we think that they're kind of over extrapolating the dovishness that we may hear when the actual data comes out. And the bottom line is the economy and the jobs market is just not slowing down fast enough, we think, to call a win on inflation just yet.
Yeah, look, you had one Fed speaker on Monday say that, and the market really turned around. We started off with down arrows on Monday, and then the market turned into positive territory on a dovish vibe.
Hold on.
And so
Another test on VWAP
the
there.
market turned, and we've seen that, and that's to your point.
Start flushing here.
Inflation still evident, not at the highs, but still evident.
There you
and
go,
the
breaking
concerns about the
VWAP.
fact that it could rise. We'll get CPI and PPI this week, to your point. At the same time, you talk about an economy that just may be too good and too long. I mean, we got the jobs report last Friday, and it was fantastic. It was, knock the cover off the ball jobs report, and the revisions for the prior 2 months. No one can argue this, but that, look, they were revised higher as well. It just meant that some things are working in great way, right?
Yeah, absolutely. And we think, the Fed doesn't want to make the same mistake twice. We all remember transitory inflation
cash possible for Thursday and Friday position.
Was rolling to the upside. Turned out to be not the case. And they have
for the data
to wait to make sure inflation is abated. Again, it comes back.
I mean, if you're trading options, it should be 1 day, right?
It would be a different
I guess you're doing a lot of
story,
swing trades.
where they have to balance both mandates. But employment's strong, and so they have all the runway to stay firm on inflation coming down. If we were the Federal Reserve, seeing CPI at 4%, it's positive. No doubt we've seen improvement, but would want to see more of a continuation in the decline before we kind of wave the white flag and say, we're good from here on out. Equity leadership as well, just looking at sector leadership, over the last month during this broad market sell-off, those utilities, real estate staples, a lot of those that are interest rate sensitive, and during a recession or a fear of a market deteriorating, those three sectors. So from an underlying fundamental standpoint,
they're going to make us wait till end of the day for this move, huh?
Equity leadership, the market right now is just not anticipating, a fall off the cliff type recession. And we think that's a good opportunity to barbell. That's kind of been our playbook throughout this year, that quality barbell of buying staples, healthcare, more defensive, along with quality growth names. We think that's a recipe for the rest of this year.
Right, understood. In the meantime, what would be your advice to investors? You talked about some of the leadership sectors, and at what point would you move into certain sectors? What are you watching?
Sure. Short term right now, we definitely see, equity put call ratio has spiked quite high. Bonds are oversold, and that's kind of what we've seen over the last few days of kind of that buy the dip that you mentioned. But on the immediate term, we still think, overweight, low volatility, quality growth. A big topic in a lot of our clients' accounts and conversations today is the cash alternatives. Bonds and private wealth clients have struggled
a little bit more.
TLT and long duration bonds are down, over 50% peak to trough, which is worse than what the S&P saw during 2008, right? So a lot of clients may be asking, should we abandon bonds when money markets are paying 5%? We call it the mirage of cash, or the allure of cash right now, and having a lot of conversations. It's not a sexy topic to talk about, but we think right now it would be short-sighted to sell out of bonds and move into money markets because we're closer to the end. We don't know if the Fed is completely done, but we can say that for a high probability that they're probably closer to the end of their Fed rate hiking cycle than the beginning. And history shows once there's a peak in real Fed funds hikes, the forward basis on short-term bonds, intermediate bonds, investment-grade corporates far succeed and outperform money market and cash alternatives. So that's a conversation we're having often with clients is, money markets are great for a portion of your wealth, kind of cash and cash management, but bonds still have a place, especially as we set up here on a go-forward basis within portfolios. So we like short 4 to 7 year investment grade corporate bonds and municipal bonds as well.
Yeah, you talk about, obviously you have the cash portion that has its value just sitting and holding and not, sort of saving the principal, even in an inflationary environment, but maybe you can at least get some yield on it. But you said, talking about large cap growth and tech and tactical overweight to energy and healthcare. Would you put what percentage of
infatuation with me
now versus next year? I mean, sometimes people like to have 30% in cash. Some people are all in and they have just 10% in cash. I mean, what would you tell folks?
Perspective is, there's always a better opportunistic place to put cash. Cash for us, in our perspective, is cash reserves options. Cash.
I just was ballooning up too big of a position. I don't want to hold through this, especially this late in the day. Just sketch.
There's always something more productive.
What 20 contracts actually? Kind of miss account too. 30.
As, adding diversification benefit, current income yield. Having duration in the portfolio and bonds over the last 2 years hasn't felt great. But in times of true stress, that keeps diversified portfolios alive. So for us, our typical allocation within cash allocations within diversified portfolios, we try to keep it pretty tight, 1 to 2%. You can even get short duration bonds, AAA rated CLOs yielding over 6% now. And that's more than money markets. So there's always more productive ways to increase income a little bit more than cash. And we think that as a fiduciary, that's our job is, we have a strategic asset allocation for long-term investing. We need to leverage all existing opportunities. Cash is for cash reserves.
Are you profitable on it? Yeah, get the heck out of that dumpster fire. I mean, it might have a bounce, but.
Alexander Reed, great to see you in Visage Wealth. Thank you very much. Coming up next, Technical Tuesday. AMD is up more than 60% this year. Kevin Horner will join us
don't
to take
do
a
that
look
stuff.
at the stock chart. Could a breakdown
See that level you're bouncing on. I see it.
Stay with us because we have so much more coming up right here on Schwab Network.
Closing some more.
I remember when I first.
I can see this thing flushing down low today, though. We just don't like the VWAP chop. Go. Scale out a little bit. You're wondering, are you profitable on this thing? Down 3% today? You must have had a wicked average down if you are. Yeah, I would definitely get out. How would you even be green? How's that possible? You're not green. Oh, it's all-time lows. Can you average down lower than all-time lows? What are you selling puts on it? Ah, that bounce. I wanted to flush only more from my trading account, just so I have buying power in there to continue to trade in there. Because this position I took on it was the whole account, which I ended up averaging into the whole account, which normally I do like. I don't do it that heavy, but I was trying to be aggressive with it. You're wondering if you should cut losses on it? I mean, this isn't really the time to cut losses. But, see. I mean, it's gonna have a bounce. $0.06. Oh, what? That's crazy. Oh, you had such a small position initially. Yeah. I mean, I can't answer that for you because I don't have any idea on your financial situation or your risk tolerance or your portfolio or anything, but I don't like the stock. That's all I'm gonna say. I don't like the stock. You're gonna miss out on some bounce though, most likely, so just be okay with that.
It's down 1%, 27,460. All right, it's Technical Tuesday.
Bounce up to
Kevin Horner's
VWAP.
with us, Senior Manager Trading Services
Breaking
Education
VWAP.
at Charles Schwab. Good to see you, Kevin Horner. Amazing what difference a week
VWAP
makes.
chop.
We were talking 43.50,
End of day.
4,200, and now we're well above 43.50 today. What do you think? Up for the third day in a row. What do you think is going on here, and what levels are you watching?
Really just some price discovery, trying to figure out where we're headed here. The move we made off of that 200-day test was fairly significant.
Didn't
Last
really
week we
test
had
at
4
200,
days in a
but
row, all sitting on about 42.10 to 42.15, and bringing that 200-day moving
close.
average on the upslope. And we've made a very strong move, of course, in the last 3 days. And I think one of the positives we take away from that is weakness on the open on Friday due to jobs numbers, weakness on the open on Monday due to the conflict overseas, and
closing some more.
therefore we had opportunity to rally. And a lot of traders don't expect rallies
Catch
in
that
those
dip.
instances, but that's exactly what we got. And I think what's interesting today is the level we stopped at. We pushed into the gap back from September 21st, got us up to through that 43.75 area, but we did not hold. So it becomes a little bit of a pause opportunity and a little bit of a concern, because we're just not
You just
yet
want to be along for the
giving us
ride?
a higher high in the most recent pullback from July.
Yeah,
Ultimately,
yeah, if you're able to get
that's what
out.
we're waiting on. Can we get a higher high
God bless you.
in the short term
Do
that
it.
would kind of validate us being back in gear here? Otherwise, I mean, there's nothing wrong with the way
I've
we've
just
moved.
given that
We
money
could easily
away.
find ourselves
It's a
devolving
donation.
into more of a sideways
Do the-
range, maybe between that 200-day
the
moving
RC
average and the 43.75, 4,400 area where we kind of reside right now. So maybe we get into that rangy action over the coming couple of weeks.
And that's the whole point, is that you said is it tried to move higher, just could not hold on those
Hey,
upper
Dink.
levels.
Eyeballs.
But they did buy them down closer to 4,200, which is interesting, right? So we didn't stay down there, and so at least we came up off those lows. In the meantime, let's talk about advanced micro devices. We were talking about, you have 34 analysts with buy ratings on this name. It's a winner year to date. What are you looking at today?
Well, of course, always love to see a breakout on news, and you also get a breakout here coincident with a 50-day moving average. I think that's what's interesting about this chart from a technical standpoint. Stock has been on the retreat since early June. We had pulled back from that 130 level all the way down to the 200-day moving average around 96. So we had a really healthy pullback, and yet at the moment, the action we've seen in the last 2-3 weeks has brought us off the 200-day, brought us through a level at 105, coincident with the 50-day moving average. And so I'm sure bulls are taking the action of the last 3 days to heart and are putting a lot of their thought process behind
one at a time
this
now.
short-term action. So the positive is if you're bullish and your
Up my
target is
average.
just the prior highs, you have an excellent risk-reward ratio opportunity here, because many bullish traders would start a new position and maybe look at something below yesterday's low as an exit strategy if they're wrong about the timing here. But that means their downside risk is something like $4 for the potential to move upward 20 to 25 or more, that's a really solid risk versus reward. So a lot of traders who are on the bullish side will probably look to see if they can position themselves as such for that type of opportunity here. If it does, in fact, get rejected, though, and that would mean very quickly, Nicole, we'd have to see this basically back below the 50-day relatively soon. Only that would bring bearish traders maybe back into the mix here. This looks a lot more bullish, I think, with today's move.
I see. Okay. Definitely worth noting.
Jeez. Of course, another diamond comes out.
In the meantime, what about
Jake probably has a diamond.
Zscaler? What jumps out at you on that chart?
Well, I've been trying to bring to the table here of late some positions that have gone into rectangle formations or sideways consolidation opportunities because they tend to give you these nice opportunities to trade to the upside.
You even have a diamond.
And that's exactly what's gone on with Zscaler here. We actually were in about a 23-point range for the better part of the last 4 months, and just yesterday pushed out of this range. This is significant because when you have a 20-plus point range to work with and you're trading a stock in the neighborhood of about 165 to 170, that means that if you can make that same distance, that next 20 to 25 points, you've got an excellent risk versus reward ratio, but also great in terms of percentage opportunity. A 25-point move in a stock like this would be about 15%.
There you go.
So there's a nice trade opportunity for the breakout. Again, you know, breakouts are fun to watch and fun to trade, assuming that they hold those breakout levels. So the movement we've just made through the last ledge of resistance is fairly important. Got to hang on to something in the neighborhood of about 163.
Breaking down.
So to kind of keep new bulls in the trade. Now, traders who bought this thing up a few weeks ago or a few months ago might not have to worry about it getting thrown back into the range. They're still going to be profitable. But if you're a relatively new positioner into that, I would think short-term traders want to make sure that we hold that 163 in the breakout. And further,
the theta decay from here to here is nasty.
Can it start trending higher
They're
more
green
quickly?
here, they're still
maybe
down.
Working against, say, a 20-day moving average or something like that. So that's way maybe a bullish trader is looking at what's going on here. It's certainly improving with the action of the last 2 days specifically.
All right, and we see what you mean about the rectangle, sort of range that we've been in on some of these names.
Breaking the neckline on this Head and Shoulders intraday.
Thank you, Nicole.
It's a big break, actually.
Coming up next, we'll talk titanium.
And if we fill that gap to the downside.
Hyperion X. So what does the new partnership with
That'd be
GME
neat.
Aerospace mean for the future of this company and its stock? Watch this. We'll be right back.
You know that tech stock we talked about?
Wow. Look at you and your choppy behavior. Look at that. Oh my gosh, dude. I guess I could have taken more profits down there. The fake flush through support. 30 for the bulls. Is it? Trailing stop maybe would have been nice. Back to VWAP. Choppy. Got diamonds, got a jack. What do you got, buddy? Got a jack. Thought you might. touch off. Check 9. Yeah.
Continues to showcase the want and need by domestic manufacturers, European manufacturers, for a sustainable source of titanium metal, which we can supply into in the coming years.
Pose another one down here.
The current issues with the titanium supply chain to date, which is that it's highly concentrated in places like China and Russia.
Right, absolutely. And so with that, you mentioned the U.S. Army, for example. You are actually producing titanium plate for the U.S. Army. Give us some size and scope as you talk about huge contracts, I'm sure. How many plates, how often, what kind of size and scope do you need? Because as you said, getting these particular materials is quite difficult, and having a partnership like this one with GKN is very helpful to move forward. You know, it says, when it says produce titanium plate for U.S. Army testing, how many plates? How big is the plate?
I can't go into too much details, but at this point, it's enough plate that say the U.S. Army and GKN Aerospace can test. So in the Army's perspective, it's essentially
maybe
plate, so
doing a VWAP
plate,
job,
getting that
it's got a nice head and shoulders.
So that eventually
big one on the intraday.
Can use more titanium.
Even a little one being built here, and it broke out of the bullish channel. So a lot of signs point to yes, but it's
to use it more
getting this close to the end of the day.
For the future. So exact volumes are something that we will outline over the coming
doesn't always
years,
continue on
with groups like,
you know, likes to find VWAP
and Lockheed Martin
by end of day
if you look at
often. So
applications, you know, these
we'll see.
these are
Been very
large
choppy last couple
these can be
hour,
very large
last
contracts.
hour I guess, since we did
and
flush.
For us, it's going to be, whilst defence will be not our largest part of our business, it's a very important part of our business, and we feel it's an important part of the national security within the US as well to be supplying into these supply chains. So more details to come on the exact size, but they can be very, very large contracts.
All right, so it shows it was a good question, because it means that there is a lack of detail on what's to come, but part of that is proprietary and national safety information. It's evident. So that being said, let's move on also to another area of strength for your company, and that is rare earth development. I see some news out of Tennessee and getting some OKs for more projects. What parts are we talking about in that realm?
So with the Titan project, which is one part of our strategy in reshoring the titanium metal supply chain, we have the titanium minerals in Tennessee, where we have the fully permitted Titan project there. But as a co-product, we do have the ability to produce, or we do produce as a co-product, the rare earth minerals. And in particular, we produce the rare earth minerals which contain both the light rare earth elements, but also the heavy rare earth elements, which are critical to electric vehicle manufacturers and, again, the defense industry as well. These are the rare earths that are we are heavily dependent on from China, and being able to produce those minerals here at home and supply into a growing supply chain that is being funded and developed here in the United States by both the corporations and the government, we can be a crucial part to that as well. So it's a nice icing on the cake, I would say, to our titanium industry or titanium reshoring thematic, that we also have this other critical minerals that we can supply into the United States.
Yeah, and the GKN Aerospace is a new item for you, a new deal, but you already have partnerships with great companies or agreements such as Ford Motor,
back up to VWAP,
which you mentioned, the Department of Defense, and others. As you spin this forward, are you concerned, and I know that you mentioned this earlier, and it's something that we always talk about when we look at EVs and the rare earth materials that are needed for EVs, but more so not just for EVs, just for the safety of our nation, that so much of this is found and developed abroad rather than at home. Are you worried?
So that's the whole reason that we started IperionX.
I'm gonna start selling out of the trading ones.
I was the founder of a company called Piedmont Lithium, which is reshoring the lithium supply chain.
I'll wait till they're green, but I should probably start scaling out.
Listed company done an extremely
Brad,
well
new highs
the
there.
last few years. The reason for IperionX is to reshore that supply chain. We start with titanium metal scrap. There's a lot of titanium metal scrap out there which is not recycled, so being able to recycle that allows us to bring back into our supply chain a domestic source of titanium metal. But as we grow that supply chain, we intend to lower the cost of titanium metal, grow that supply chain. Groups like in the consumer electronics market, you would have seen the titanium iPhone come out. Consumer electronics is a big business that could grow.
Oh, this Head and Shoulders, but it's
is a big business that can use more titanium. Military can use more titanium. We eventually see ourselves being able to backward integrate into minerals that are produced from projects like our Titan project in the United States to never be dependent on these foreign sources again. So yes, I was concerned about China, Russia owning the supply chain for titanium metal, and that was the reason why me and my team started IperionX.
Biden was talking about Israel.
And 3 years into
I heard he was
journey,
talking.
Gone a long way in solving that. We're getting a lot of support. We've got some great partners. And
we continue to get a lot. Do you think that's what caused this dump? This was right in the bond auction. Came into like right at 1 o'clock.
How corrosion resistant it is. It's stronger than steel. So good luck on your continued work there. I know you're based in Charlotte, North Carolina. Anastasios, thank you. Good to speak with you, and congratulations on the new partnership as well. Anastasios,
I appreciate that.
CEO of IperionX. Still ahead, we're going to take
there
a
you
closer
go.
look at how e-commerce
Look at this freaking chop, man.
If
I wasn't in anything, this would be such a mess to try and trade.
Our next guest will explain why AI won't be enough to create a better shopping experience. Maybe not just yet. Let's find out why.
did get the straight there. There's been a lot of low card straights coming out. I should have raised.
On the long end, which keep in mind has recently been, recently to 5% in the 30-year, and I think that's what had the indices under pressure. But after that stronger than expected jobs report, and well, here you can see as rates have backed off, the S&Ps have rallied in a big way. Here the chart shows Friday's low and the run-up that we saw into that high today, 44.19. Taking a step back, I want to show you because, again, kind of a mixed day in terms of market catalysts here, but a win for the bulls in many ways, the recent rally. Here's that low from Friday. I want to point out that it missed taking out the low from earlier in the week, so a technical rally and I guess a fundamental one in that sense that rates have backed off, and even amidst some of the concerns, right, the ongoing volatile situation in the Middle East.
That's a good point. I don't like cough anymore.
Speaking live about
That's
it right
crazy,
now,
psych. I had that cough for like a whole quarter.
Carrying some of those gains here as we head into the close, but
that's so weird.
For the most part, hanging out in the middle of the range.
I don't want to talk about it. It's gonna make it come back.
Just over 0.5%. Look at where we are.
Yeah, I think I had like 3 months.
I think this is important as we head into the PPI tomorrow, CPI,
such an odd
minutes this week. Some of the earnings.
I heard the new COVID right now is just people having diarrhea.
Further into later in the show, but you can
that's
see
it.
here, to your point, the nice strong rally, 3 days higher. We're
So that's probably next
back
for me.
up to the 50-day moving average, a nice bounce off the 200, Nicole.
If you have diarrhea,
Yeah, and I think you make a great point mentioning President Biden really
just
talking about
stay
taking
hydrated.
steps to disrupt any issues that could occur here at home.
That's
Again,
the enemy.
Also
Is
reiterating,
dehydration.
Making sure Israel has
It's
what
hard,
it
but you just
needs.
gotta
And so
continually
we'll
just
watch
drink
the
water,
markets to see if any,
drink electrolytes.
volatility occurs
Don't
while
have
the
sugar.
president is speaking. In the meantime,
Have
the
some
safe
salt.
haven of gold, which is up about $9
Just
right now.
flush your body with water.
Tell me a little bit about some of the moves that you're watching there.
Yeah,
Dehydration headaches are
gold, which has been
hell.
and continues to be benefiting from some of
And it
what
takes like a
we've
whole
seen in
day
terms
to
of
catch back up on
treasuries, which have
hydration.
been
So
coming
you've
off,
got a
and
first
US
onset of
dollar, which is
diarrhea.
backed off as well. Now, gold often in times, keep in mind that traditional safe haven
Just
type
like
tendency. I've got a handful of
downing
charts here, so
fluids.
to hold on to your hat
Takes like a
here
day
as
to
we go
catch up.
through them. Nicole, I want you to see first
Come
and
on,
foremost.
Spy,
I mentioned
don't do
rates
us
coming
like
off. That's
this.
helped the S&Ps inch their way higher, and also gold higher, the dollar lower. Taking a look here, though, at the 10-year futures contract, first and foremost, you can see the rally we've seen off those lows from late last week. The bonds, or the 10-year, I should say, from 106 up to 108, and take a look here at the 10-year. Now, I think this is interesting. Everybody's talking about yields, which have been coming off. Well, you can see just barely, right? I mean, compared to what we've seen throughout the last couple of years and that trajectory that's been playing out to the upside as we step away from yields, taking a look at the U.S. dollar ultimately, because when you're talking about gold, that geopolitical bid that comes in, that premium, you also have these as factors as well. As the dollar's been breaking down here to this 105, 105.40 level, you've seen a little bit of weakness here in the U.S. dollar. And then ultimately, let's take a look here as you can see gold here recently benefiting from that, coming off that 1823 low that we saw Friday and really reversing this trend that we've been seeing. It had been under pressure.
Made it.
This recent rally again. You can
I don't think you were around. If you go back though, at 145,
again,
you listen from then.
We just pointed to yields which are backed off
I had
the last couple days, but also
one of my sons.
Geopolitical tensions, a volatile situation that hasn't necessarily
They little
worsened,
message
it
for you.
seems like, in terms of broadening, But
That would have been, I
definitely
guess, 1
one that's
hour ago.
ongoing, and that's what we're seeing in terms of gold benefiting from that.
All right, thank you for all of that. Ben Lichtenstein, good to see you. Appreciate it. Thank you. All
Look at her horseshoe
the holiday
earrings.
season is upon us. In fact, today
It's like almost regulation size.
Prime Day promotion is underway, but people are already shopping for the
21.25%.
holidays. We know that for a fact. People start earlier and earlier. So the future of e-commerce and retail, we welcome in Madhu Kuruvilla, CEO of
That was pretty good. You should jump on the Happy Money chat and read all the greetings Psych-Up gives us.
One of the reasons I don't go to the store,
That'd
I
be
don't want
flawless.
to stand in the line. One of the reasons you're doing e-commerce, you want to check out as fast as you can. You have the fastest way to do this.
Investment terms, 25 cents.
You think retailers to get on board immediately, it'll help their sales. Tell us about Bolt.
Bolt is helping e-commerce vendors with one of their biggest problems. You mentioned it, Nicole.
Dude, I do not want to see this thing rally here.
Buy more. Provide them a
Really?
fast,
Gonna do
simple, and
that?
secure one-click experience so people end up buying more. 76% of shoppers don't end up converting on after adding things to their cart. So Bolt is one of the only enterprise solution out there that's helping retailers to solve that problem in a very merchant-friendly way by allowing them to own the shopper and own the first-party data and build that relationship with the consumer.
And that's part of the success at Amazon. They have your name, they have your card, and you just hit it, buy it, done. You know, in seconds.
You can just
and that
go
gives you
back. You can seek back
opportunity to have free
1 hour
time
from now.
to buy more.
Oh gosh, look at that.
And that's your point, is how
Flying out of
to
this, picking it
really
back up.
increase sales. And you think that retailers can do so by implementing something
Maybe.
like this. This is sort of the meeting of fintech and retail e-commerce put
Job
together.
sucks.
What about the folks that are doing a lot of buy now, pay later? I mean, what kind of shoppers are we expecting for the holiday season?
Well, I mean, the buy now, pay laters will continue to increase their market share even this year, just like they saw last year. But if you look at the entire spectrum, what you're seeing from consumers is they're looking for choices. They want retailers and brands to provide all the choices.
Right.
And so buy now, pay later become one of the choices. But that convenience of having whatever choices they're looking for and able to select them fast and just be done with that buying process as quickly as possible is helping retailers to improve their top line and a happy consumer at the end.
In the end, I mean, this is sort of really understanding your shopper network. It's the people that are signed up for Bolt to have this quick exit
15 minutes to
strategy.
3.
At the same time, you have the big responsibility of
Probably close the rest of these.
information and AI and preventing fraud, right? And I'm sure you're working diligently on making sure that that happens. Tell us a little bit about how you work on that.
Yeah, so Bolt is the ability for us to recognize shoppers and provide them a very fast experience is based on the fast-growing global shopper network we have. And we have tens of millions of shoppers on our network. It's been growing like 44% year over year.
Wow.
So we have shoppers information like their shipping information, payment information.
Can't believe I did
we
that.
are able to integrate our product
closed on that
seamlessly
flush.
into an enterprise retailer so that retailers can maintain their experience and able to have access to that consumer information with first-party data. But your point on being security and safety, privacy, all of that absolutely has to be top of mind, especially us being the solution for enterprise retailers. That is top of mind, which is why we meet every accreditation out there and in fact raise the bar and able to convince retailers that and consumer, both sides, that we are the choice to go with.
Yeah, I know. You said you've been incorporating AI into your fraud product for years in order to make
Looks
sure.
like it wants to be bullish for
Any
Power
thoughts
Hour.
on, and sort of merging or working, you know, in conjunction with something like Shopify,
Flipping the calls, we break this-
Shop Pay or whatever that is, because
this
it
channel.
sounds like it's similar. Have you been approached by any retailers or fintech companies
Back up into there.
about trying to work with them?
Yeah,
you have a big, it sounds like you have, when you talk about tens of millions of people signed up.
Yeah, so one of the things
Jeez, look at
unique
that
about
freaking
Bolt
candle.
is we are independent, We're not part of a payment network, or we are not part of an e-commerce stack. So we have the ability to partner with everybody in the ecosystem, which is what we are focused on.
So you like that?
We like that, and we like to maintain that. And that's the reason why we are able to be the solution for large enterprise retailers, and the ability for them to use both. For example, Revolve, one of the large retailers using our product, they were able to put one engineer for a couple of weeks and they are A/B testing. They found a 4% increase in revenue. Really? So that's the kind of impact we are able to provide quickly, and especially the holiday seasons coming up.
A lot of volume today, I bet.
A lot of retailers are looking at, while AI and all the different things
There's
can
a little
provide
resistance
big
there.
long-term impact, what can we do right now, right here?
See that?
And so we are able to provide that
Wash down the
solution.
VWAP.
Right, and better economy means better numbers for Bolt, and you think we're going to see what?
The chop here is
%
insane.
growth for shoppers? How much they'll spend this year?
The e-commerce is going to grow probably a modest
22% on RAD.
3-4% overall.
24%.
For retailers or brands, really
Closing,
depending on discretionary spending on consumers,
some contracts
they
there.
are going to find a little bit more difficult this year, and because consumers are going to be limited on what they are going to spend.
Mortar.
Yeah.
Yeah, interesting. Maju Kuruvaila, thank you so much
Dude,
for being with us.
if she says that name right, that's amazing.
Bolt.
I don't know if she's saying it right though. I have no idea.
Get shopping right after this segment. All right, we
Can I have a
continue
flush?
with our panel next. Who's going to talk about
Yes.
Microsoft and the company's
Wow, look at that.
division Blizzard. Obviously,
Breaking
something
VWAP
in
now.
focus. So we'll get
Holy
some details
moly.
on that and talk about the AI chip coming up.
Close another contract there. Do it. Closing another one. A trailing stop. It's confusing trailing stop on options. It's like trailing stop amount. Like the amount of the contract, so what, like 20 cents? Would that be reasonable? Probably not enough. These swings are huge. They're tomorrow's contracts though, so not as big as dailies. $10 to $20. Do 30 cent. Doing 30 cent on the like half of the last. If that makes sense. 2 out of the 4 that I have left on the secondary account. 30 cent trailing stop. And then still waiting my trading account. Just hopeful that we have a flush. Got an order to sell 5. Ready to go. It's pretty cute, man. That's a boy. It's a little boy. There's no way you can read Good Morning Languages. You could try. There you go, there's a flush. Oh, that little if it flush and pumps, I'm gonna be out of those 2 probably. Yeah, he was pretty embarrassed. He did it though. Ooh, there you go. 7 minutes to power hour. Look at this. Just complete and utter trader frustration through here. Maybe get a continuation SPY. Maybe don't just find support here again. Por favor. There you go, SPY. Do it. I needed a lot lower move now. Ran out of all the time on those dailies. What was green here is still red here. I missed a power hour and the market's dumping. Dumping, but looks like it's continuing its downtrend, hopefully. This liquidity was complete stop hunting. Crash. Yeah, that's right, psych you up. Yeah, Mally, it would have been, it was at 145, so that's... I tried to look at a timestamp on the thing, I couldn't find it. I've gone to the stream. Let's see, 145 would have been hour and 15 minutes from now. Back, I think, yeah. I guess you just gotta leave my stream on all day. I guess this is the way. Never know when one of my kids is gonna give you a shout out. So I don't get too big of a pump. I won't get my trailing stop triggered. Give myself pretty wide. I think like 30 cents. It's pretty wide. How do you feel about your kicker? Not too good. Glad you didn't have two pair. That was risky. I didn't think so with his bat. That is neat. Josh, you and me are the same height. That is neat. I can't believe what movie that's from. pretty nostalgic to go back and watch those movies. Here's power hour, dump hour, let's go. High card is the way. And down here, can't seem to have any continuation, just up and still. Build more liquidity. Alright, my trailing stop closed me out of those two. That was a pretty big, oh, and there you go. I'm gonna say I'd give it a big leash there. Found it. 11140. I was at 435, 45. That's all I need to know. Where was SPY? I'll tell you exactly when it was. New high there on RAD. 25%.
Able to support the market with, namely the chip makers that have bounced back. Today we saw a couple of those bouncing and ignoring some negative analyst commentary. But Alphabet has been a key one that I just want to start off with because it's gone very underappreciated. We talked about it earlier this morning with some of the options activity favoring the upside here, and it looks like some of those traders are getting what they paid for and hoped for, which is a fresh 52-week high. Alphabet breaking out should not be ignored because you don't have to have all those big, magical, magnificent
Trying to figure out when to sell calls on RAD.
Fangs or
I
whatever
want
you
to
want
just
to call
hold
them,
it for a bit.
rallying at the same time. It always helps to
I was
have
a little
one
quick
or
on the
two.
gun on AMC.
Just the fact that you can get
It looked bullish.
big tech stock, one of the leaders, making a fresh new 52-week high, while the market is sort of up
Nice
for
gap fill up at
grabs
12
in
and a
terms of
half.
its general trend and control by bears or bulls. I think that still is very much up for debate with the S&P off the highs, but the NASDAQ bouncing and finding support. The fact that you have a big tech company making a fresh 52-week high here is definitely encouraging for bulls, even if tech is not going to be the actual leader on a session like today. So, point is, XLK and the sector is at the back of the pack, but at least one giant making a 52-week high certainly is supportive. High beta stocks are also doing pretty well, and that's kind of interesting because a lot of times you think about high beta as being tied to the tech trade and the growth trade, but there's actually some other stuff in there that's swingy and important and a little bit more cyclical in nature. Some of the airlines and the consumer plays that are doing well. Some of the discretionary stocks and staples actually that have been a little bit volatile the past couple months are firming up in the right direction, seemingly a positive message about the consumer going into the holiday season, which of course, in case you forgot, is right around the corner. Earnings are around the corner too, and that's the other part of the second half of this week that gets interesting with the banks kicking things off. You're getting a little bit more favorable environment on the macro side the last few sessions as yields calm down. Financials are rallying. The sector is right now up about 80 bips, and the regional banks are actually doing even better, which is good. Dollar's down right now. That'll be something we want to watch, as well as bonds over the next couple days, because even though bulls are getting some relief, they're still going to need more. The chart of the dollar is still making higher lows pretty clearly. But yeah, 5 days in a row, and now slipping below kind of the plateau that had been formed up there.
3 o'clock. I want
dollar
these
highs these last 3 months above 106 bucks. Kind of broke a little bit here today. So it does, I think, get interesting on the chart. We haven't had 5 down days for the dollar since the summer. The left side of that chart was back in July when the dollar really fell off a cliff because investors were convinced that the Fed was definitely done and possibly still going to cut. No one thinks they're going to cut anytime soon. Some of the Fed language now is adding up to a consensus by the central bank that they don't have to hike by the end of the year. So the dollar easing up a little bit makes some sense. Still, though, if the dollar is really going to be a tailwind and a catalyst for higher stock prices, you're going to need this trend to actually unwind. Most likely, just generally speaking, doesn't have to be that way. The dollar doesn't have to go down for stocks to go up. Yields don't have to go down for stocks to go up. There's a lot of people that like to remind us that there's many instances in history where yields go up and stocks go up together. Yes, I know. You don't have to tweet at me every time I say that right now stocks want yields to go down. The point is that the relationships of this market have been very clear and reliable, and the relationships have told us that stocks do need yields to calm down, and it needs the dollar to calm down too. So both of those charts still have a lot of proving to do for bulls, but they are getting very interesting here because the 2-year yield has also pulled back substantially off the highs of the last several months. Still holding the uptrend, as you can see, higher highs and higher lows. Same situation for the dollar, basically, but both of these charts now showing an amount of weakness that could potentially translate into a bigger rollover if you just get a couple more days like today. Of course, it might be a little harder to come by when you're going to be looking at 3.5% inflation prints tomorrow. Also, keep your eye out for anything from Fed speakers, including this afternoon. Neil Kashkari also speaking right now. We got Danielle DiMartino Booth joining us to talk about some of the central bank stuff in a moment. Let's bring in Kevin Hanks, host of Fast Market, my main man here this afternoon and this morning too this week. Kev, hey, the biggest group, one of them today, is the regional banks rallying. I want to start there because banks are up too going into the financial earnings this week, and I feel like with bonds calming down, you're just getting a lot of things that bulls want to see here, both in terms of breadth, participation, and leadership outside of tech.
Yeah, if you look at the Russell 2000, Oliver, it is clearly outpacing the rest of the 3 major indices, and by a large margin. And that is fueled by, several. Remember, it's a big sample size, but a lot of it is regional banks. You've got some of the ETF involved with regional banks up significantly today, but certainly one of the sectors that's leading the Russell 2000 higher is the regional banks, Oliver. Although, that being said, there's strength everywhere, Oliver. If you look at the S&P 500, all 11 sectors are now higher on the day. Even though this is a rare, in these days, right side of the visual chart that is more green than the left, it's still a solid day.
Thankfully, my contracts, the dailies, are at least they're in the money, so
but there's still an hour
they
or so
decay
to go
bad,
here.
but
So, yeah, this is a strong day.
not as
and
bad as if they were out of the money.
unlikely, in the world that we live in, with everything going on, an unlikely 3rd straight rally day in the markets. Incredible.
The other thing, too, yesterday we were talking about was how maybe even regardless of cause, lower bond yields will be welcomed by the market. So in a kind of callous, twisted way where a geopolitical event might put a rush of safety buying into treasuries, that the market might actually like that. Today we haven't gotten any big bid into bonds. It's more just that we're not selling off. And also some of the Fed speak, too, seems pretty welcoming to a calm regime that is higher for longer. Doesn't mean any cuts, but also doesn't mean any hikes.
Yeah, if you read the Fed speak and you read into the tea leaves, though they don't say it, exclusively, they are starting to drift towards done, at least for the time being, raising rates. And now the question is, how long do we hold rates at this level? So remember, Jerome Powell alluded to that in, I think it was 2 Fed meetings ago, where he said, we've got rates restrictive enough now. Now the
All in, sure. 2.6
job is
good.
to leave them there
I'll
and
take
let
it.
them do the job on inflation.
Oh, I didn't mean to go all
that
in.
seems to be happening.
Oh,
right?
because he. Oh my goodness, I didn't see his
Payroll
all
number
in.
that we got last
Whoops.
Friday was a
3-6
powerful
offsuit.
number with
And
lower
jack.
to moderate inflation.
Spade.
If we
Oh.
get PPI tomorrow, CPI on Thursday show the same thing.
Dang.
You
Should've
have
gone.
to think that
I thought it was
this
just him that was
market
all in.
has
I
some
realized he
room
went
to
all
run
in
here,
too.
Oliver. So
Whoops.
it's going to get interesting the next couple days.
Squandered.
And this
Big
ugly
pot.
September leading into a choppy, not necessarily negative October. It looks like we're off to the races here if the data comes in, Oliver.
Bingo.
My
Well
son's
said. I mean,
beaming.
what else is there to say? I think that's perfectly it. You get
Thanks,
inflation
Smelly,
coming
for
along
sure, man.
tomorrow, and it's
Glad
hard
you got
to
to
really
hear it.
figure out kind of what gets in the way necessarily that we can obviously see on the calendar. The other thing too is that some of our
rallying back up here.
stock-specific blow-ups of like the last month have proven maybe unwarranted too. When we get a company like Pepsi bouncing back on earnings, I feel like that's just worth a mention because it's still hanging out higher today in the staples and consumer group. Both styles, discretionary and staples, are up today.
Yeah. You know, there was a lot of consumer staple sector that got hit on this Walmart data showing that consumers are choosing less calories. Well, they went right to salty snacks and soda. They hit Coke, they hit Pepsi, they hit some of the other consumer staples. Well, Pepsi's numbers just came out, and in the trading world, Oliver, we would call this an out trade, right? Somebody's wrong. It's either Walmart's data or Pepsi's earnings, and Pepsi put up the numbers.
True.
So, yeah, real interesting.
New high there on
Pepsi
round
for the
26,
earnings beat on
26.7.
earnings per share, beat on revenue, and raised full-year guidance.
Might
at
be
the
a
end
little
of the year.
resistance
So
right
they're
here.
still seeing strong growth through the end of the year. So Pepsi, a real good day and a nice snapback. And frankly, Oliver, with the sell-off that was much anticipated poor earnings, I'm surprised the stock's not up more, frankly.
And, you know, it's a very stock-specific story, but I do just kind of feel like that particular narrative, it's kind of an example of how some of these extremes are seeping their way through the market in different places. I feel like there's another thing kind of going on with the airlines on that front, too. Like, none of them are going to be able to make money with crude oil where it is, but some of these things are going to get disproven with earnings. Thanks, Kevin. Appreciate it. Host Fast Market. Let's talk some more about the big macro theme this week around inflation and the Fed's response to where the economy is right now. Joining us, Danielle DiMartino-Booth, the CEO and Chief Strategist at QI Research. And Danielle, welcome back to the show. So it seems like, once again, we're getting this kind of consensus building among Fed speakers that they are done for now. Do you think that is indeed the case? Because they said that earlier this summer, too, and then the dollar went on a big run for 3 months. So.
Yeah, I think we're a lot closer to the Fed having a double pause. Actually, the last time we spoke, I said that if there were 2 pauses in a row, then you should look for this to be the end of the rate hiking cycle. And we really have seen a lot of the Fed's tightening done at the long end of the yield curve with the benchmark 10-year Treasury yield. And what's more important is we've heard corroboration
my computer
after
again.
corroboration.
This browser's going
and
slow
now it's
again.
culminated with the person in the media, potentially most in the know with the Fed, publishing just a little while ago saying that the Fed's heavy lifting has been done, that they can stop raising interest rates at this point because enough damage has been done by higher long-end yields. We had another big bankruptcy announced today that the Fed's job on the rate side is finished. This has nothing to do, as I know you think I'm a broken record with this, but I always bring up the balance sheet. This has nothing to do with the tightening that will continue on the balance sheet side.
Well, that is important because it still means that there is some tightening strings kind of being pulled outside of just the hikes. And even the fact that we're not cutting anytime soon leaves that terminal rate at a level that should kind of tighten up the economy on its own anyway, is the theory, I guess.
I can't do spreads. My account's not big enough.
And it's certainly the case for a lot of high-yield bond
humbling.
issuers who are hoping that rates would come back down to the zero bound just in time for them to hit their refinancings that were going to be coming due in 2024 and 2025. That does not appear to be in the cards. And to your point, what matters at this point is that rates stay at a very high plateau. That means that if you sold bonds as Corporation XYZ in the thick of the zero interest rate policy 2021, 2022 early, and you're hoping to be able to revisit
End-of-day chop is kind of ugly.
Policy, Jay
Kind
Powell
of unusual
and
too, it
all
seems
of
like.
the others, including the most dovish members, are
Guess the
saying,
VWAP
no,
was
that's not going to be
too
the case.
strong today.
We're going to maintain a high interest rate policy. Hashtag higher for longer is a real thing. And I think that we will continue to see companies that can cash flow through it, able to refinance, and companies that cannot file for Chapter 11. It's just a fact of life.
All right, so we're in that higher for longer that should kind of weed out the, as the tide goes out, whoever's swimming without shorts, et cetera, the wheat from the chaff, whatever kind of. Yeah,
exactly.
Here's the thing, too, to that point, Danielle, is that while we're in that higher for longer, I do kind of wonder if maybe there's another clause on there that's like maybe forever, because we keep getting this economy showing up better than expected. What then would really cause them to go the other way and start loosening? I mean, we just printed a 300,000 jobs print without any scary wage inflation. I mean, this is like mind-boggling to this point. So should we also be pushing out our expectations for cuts, like maybe to the point we stop trying to game it?
I have so much time on these. I'd rather just
I'm not sure
4 minutes
gaming
go
is
call
the
them.
right way to look at it, but if you look at these at the dot plot that we had last time, their endpoint starts with a 2 handle. They don't see a calamity anytime out over the next few years that would cause them to revisit the zero bound. And that in and of itself is meaningful. Even if we go into recession, I don't think that Fed policymakers intend to go back to the zero bound. And that will matter for office towers, for some multifamily, as we're seeing in commercial real estate. That will matter for many companies. And it's the level matters. And that's why I think that we'll all be so tuned into these Fed minutes to see how much backing there is to never respond, to never be a reactive Federal Reserve, at least under the chair of Jerome Powell, such that you're required to go back down to that zero bound. And again, I think that levels really, really matter here. And there were a lot of warts on that payroll report. But the one you mentioned is the most important, and that's that we're not seeing wage inflation take off. That's going to give policymakers a lot of ammunition to keep this higher for longer in place.
It's a very good point about the level, right? Because we've been so focused on the rate of change and how it's changing for so long, that level's going to do work when it's as high as it is. I'm curious, Danielle, what you think about the bond market explanation or justification, rather, for the Fed staying on hold. You intimated the Nick Timiraos article that cited some of the Fed research about how the bond market, quote unquote, is doing its job for it. How clear is that? How obvious is that? Because if the bond market's selling off on great data, then maybe we will have a rebound in inflation, or at least sticky inflation. How much should they rely on this notion that the market's doing their own work for them?
So I think the idea there, and when they reference that, they're talking about financial conditions. And financial conditions, when they tighten enough, that means that, because remember, a few rate hikes ago, Jerome Powell would come out after the meeting and he would be resolute, and I'm going to keep tightening, and the stock market would just go, I don't care. And bond yields they really wouldn't go up that much to where it was problematic. That's no longer the case. Financial conditions were much easier 3, even 4 months ago than they are right now. And when Fed officials refer to what they're looking at and what they're studying, they're talking about financial conditions. And that right now is flowing through into higher bond yields, higher high yield junk bond yields, and lower stock prices. The last few days notwithstanding, of course, as we've seen the benchmark 10-year Treasury come a good 20 basis points off of the highs after that payroll report printed on Friday. It's all about the financial conditions. They're doing the heavy lifting for the Fed. That's what they're talking about.
Okay. And as pertains to the prints the next 2 days, PPI and CPI, what kind of tolerance do you think the Fed has for a 3 handle on inflation? Is that something that they can stand by and allow if it doesn't go up again?
I think that's certainly going to be the case. We're seeing companies continue to close. We're going to see in the jobless claims data evidence of all of these strikes that are going on. So we know that income is being lost. There's no real avenue to press upwards inflation the way that it was in 21 and 22. Of course, you've got those student loan repayments resuming. You have the entire state of California, the world's 5th largest economy, making its federal income tax payments on October the 15th. So there are not a lot of sources right now that can press inflation upwards. Given sticky prices at the gasoline pump, it's going to cause a substitution effect for many U.S. households where they're going to be forced to spend less on whatever else it is that they need to buy after they take care of essentials.
All right. Danielle, always a pleasure to get your thoughts here on a timely week. Appreciate it. Great stuff.
Thank you for having me.
Thank you, Danielle DiMartino-Booth at QBine Research. Coming up, let's do some trading and get ready for the other big calendar event, that is earnings, and start with banks. Tony Zhang's got a trade and probably the most resilient and reliable financial in the market, steadily grinding out a trend higher if you zoom out a year, is JP Morgan Chase.
Oh, I end up landing a straight. What do you know? All right, SPY. 320. Ready to dump these contracts. Need to break this low here. One more chop. Had your fun for 2 hours almost. Stressful day ever. Wait, who raised 140? This guy's stoked. Oh my gosh. Oh, he got this straight. Okay, nice. I won it with the 5s. We finding some horizontal support here. I know it's just so choppy. Close one of these on the profitable one. We're gonna wait for Fugazi. Kill all the dailies. funny when these two guys start chatting on here on the poker game. Fucking trash. Everyone tilted.
Or so, I'd likely be closing it or at least making some adjustments based on how earnings plays out.
Okay. And the absorption of assets from earlier this year, you think that JP Morgan has to prove that was the right move to buy banks, or have the earnings already the last 2 quarters, or at least maybe the last single quarter here, shown that there was no negative drag from that acquisition?
Yeah, that's exactly right. This is certainly going to be the first earnings that we're going to see a read into that. But so far, early reads, it seems to be, they bought assets that were fairly clean. I think this is going to look like this was a great deal for JP Morgan to buy First Republic.
Okay. All right, good stuff. Thanks for the trade, Tony. Nice prep here for our earnings as we get into that discussion in the second half of this week. Tony Zhang, options play. All right, buying the call spread, and JP Morgan going into the report with a month of time to realize a bounce. Got some more options coming up. Alex Coffey's trades that he saw in today's market are a little bit more tech-oriented, with the exception of Pepsi, as we continue to look at that stock's bounce back.
This is kind of unusual to have just a chop in the last 2 hours. I feel like, just as of late at least. Like the whole move was at the morning move, which is common, and then some consolidation, liquidity building, whatever, chop in the middle of the day. But then we had a big move right towards the middle of the day, and then the rest of the day just chopping is unusual as of late. 3:30. 30 minutes till close. Another opportunity here and here. Really tricky because it looks like it's breaking down and then nope. Here's a chop. And it probably wants VWAP for close too. There's a move up. I'll close out of a few of these. Ducks.
Effectively lock in a 153.08 selling price.
Okay. So today's total volume of options is around 125,000. I think that's what I'm reading here, right? Is it a pretty big trade? I mean, is this like someone who might be a big owner of Pepsi? I mean, it seems like you think this would be someone hedging a big position. The
reason I think that is partially for what you talk about. If you look at just put volume, for example, there's 63,000 of these that have traded.
Yeah.
Well, 8,500 of them were this one single block.
Bingo. Okay,
so there you go.
So this is more than 10% of the put market today. Huh. Interesting. All right. Well, look, I mean, I got to say, I thought if you would have told me that Pepsi was going to bounce today, I probably thought it would have been bigger than 1.9% and that we would have ended near the highs. And we're not really. We're kind of fading. We were at 166. So that quick pop this morning when it came out didn't really materialize into a bigger run. So I guess people are still very
all in.
skeptical
That guy
about
call me?
this. So we'll keep that trade in mind. You got two bullish trades here. Palantir, kind of like the silent winner
Got a flush.
defense stocks the last
Holy
couple of days.
lucky.
I do kind of wonder if eventually maybe we'll kind of put this
Are you
in that
kidding me?
category, but it still is a tech company at the end of the day and classified as such. But given the counterterrorism
jacked.
software that they deploy and
Why in the world?
folks who buy their services from the government, it's been trading, it seems like, on the Israel-Palestine thing.
This is a company that I think is sort of a hybrid between AI and kind of machine learning and data science and defense contracting and a relationship with government. With governments and sort of military almost more so. I know that they have some corporate partnerships, but that's something they've been trying to branch into.
Sure.
This is largely
Government's their bread and butter.
And it continues to be, and there's a reason to think that you could find the conclusion someone would make that, you know, increased geopolitical tensions would require additional reasons for some of the services that Palantir is offering. One thing that seems to be the case with this company is it's one that the believers in seem pretty stalwart with that belief, but the timing seems tough, and it's hard to know, you know, where companies like this fall in sort of the risk tolerance for investors. One particular investor, the one that we're looking at here, is making a pretty big bet, but they're giving themselves time for this to actually take place. This is a stock that has moved a lot in a hurry, but it does go through lulls at times as well. And so this trader went out to the May of 2024 cycle. So that's a good 6 months or so away, a little bit more than that actually.
4 suited going forward again.
Now. Bought 4,000 of the 23 strike calls.
That's straight.
This is a name that trades with a lot of volatility. You can't buy calls for cheap. They had to spend $219 of a debit for this much time for an option that's still that much out of the money when you look at the current stock at under $18 a share. Their break even would be $25.19. Well, I'm just looking at this stock right now.
Yeah, that guy better leave.
You're going to need upwards of a 40%
Took all our cards with an awful hand, all our chips.
Break-even point. So you're going to need a big move, but you got time for that to happen. And for a stock that a relatively quiet day is up 1.5%, it doesn't seem outside the realm of possibility. But this trader was willing to stake $876,000 on this as a possibility, if not a probability, if they're actually, you know, doing these type of trades and investments.
Okay. All right, so pretty bullish there. And I get it because the market had a really good couple days there. It kind of feels it out a little bit today, but still a nice pop and almost back to 52-week highs. Well, a couple bucks away, which is still a decent amount for an $18 stock. But we're up again in the session, even as it pulled back a tiny bit. Let's talk Rivian. Couple good days here, trying to come back after it got shredded on the convertible note deal. And someone buying upside here, selling downside. How big is the options market of Rivian? It's still pretty juicy?
Well, this trader is hoping so because they didn't give themselves much time. They made a massive, massive play here in Rivian, and
dude, are you kidding me?
Value to work with. This trader
And you
bought
called it
5,000
down
of
in
the
the
21
first
calls
time.
that expire Friday. So this thing needs to move in a hurry. They spent only 23 this Friday. They spent 23 cents on these, but when you do it 5,000 times, it's still $115,000. That at the moment is not tracking to be worth anything in just a handful of days. This stock needs to be above 21.23 by the end of the week for this trader to break even on this trade.
That
But
was
of course,
poorly played, sir.
A name that has proven it can move a lot,
Got
and today
lucky.
is of course an example of that, up 5.5%, over $1 on the session to 1980 in real time. But just looking at the end of the week, if I just look at the one standard deviation sort of probabilistic range based off the option prices, this thing is targeting with that about $1.15 in either direction. That's not even a 21. So not necessarily what this trader is hoping for. They're looking for a multi-standard deviation upside move.
Okay. Yeah.
This guy with 9. I thought I could do a big bet. You'd call it. I love it.
Bet. I feel like the strike is situated in a very purposeful way because
I closed some of the puts for a loss, unfortunately. Still have some left, more than half.
From last week. So they're hoping it gets back to where it was before that sell-off.
When you're looking at sort of the dynamics on volume, 230,000 option contracts traded today, Oliver, in this one. As I said, this particular trade
choppy
was
last
5,000
2 hours,
calls.
3 hours.
150 of the 230,000 options
Ugly.
traded, 150,000 of them were calls. So calls are outnumbering by about a 2-to-1 margin. So certainly some bullish trading taking place today in Rivian.
Yeah, good stuff. Calls outnumbering puts, quite a bit different than the last trade we looked at for Pepsi. Nice, thanks. And Palantir too. Thanks, Alex. Good stuff. Good eyes in the options corner this week. Coming up, we're going to talk some commodities as crude oil's had a pretty rocky week now. The selling to the downside, the pop yesterday, and no follow through today for the crude bulls. Then we're going to give you an update on Netflix. Some slowing subscriber growth outside the U.S. is maybe why the stock is down 2.5%. We'll be right back.
Really wish I didn't have contracts through all this job. When you're way down on contracts, they come back profitable. It's like you just gotta close them, even if you can't re-enter. If you think about it, if you're barely profitable after a huge move, most likely not going to continue in profitability. You can always re-enter. It's like, would you enter at the very low of the flush on puts? That's basically what you're doing if you're not closing at that low. Right? You wouldn't open it then. Maybe you should close it. $20K, I meant to bet a hot pot. What did you have? Nothing. Why did you call? I guess it was only 20K. We did 20K min bet. 20 minutes to end a day. Still stuck in this chop. Still just burning my theta. I hate that mindset with my small account. Where I don't want to close and take the loss because I can't get back in. But I have other accounts I can get back in with. Just stupid. Gotta get that in my head. Those are the worst days I have on this account. If we get a 10-minute Fugazi move to the downside, it maybe could, I don't know, it'd have to be big. Probably too big.
And the nationwide nation sanctions that basically fell into place pretty quickly on Russia. That math and even that logic from like a pseudo-political standpoint was a lot easier to follow, I think, than this one. Is maybe a simple way to kind of describe what you're saying.
Yeah, absolutely. When you have a large crude producer in full view being either the main other party to a conflict or the one who caused the actual conflict, as in the case with Russia-Ukraine, it's a lot different. That spike was generated by that fact, the fact that it was an actual producer involved, and again, probably the cause of that conflict. We don't know that at this point. At least we don't know it to the extent that you haven't seen President Biden or any of the other Western allies go on and say we're going to impart strict sanctions on Iranian oil. They haven't said that. So given that Iran has been allowed to produce, export, and sell oil over the past, say, 3 years, again, coming up from its low in 2020 of below 2 million barrels a day to where it is now, I don't suspect that that's what's going to happen in the next week or so. So that spike was probably correct, but it was probably more short covering that we saw in the crude oil after the big drop that we've seen. And I suspect this is likely to drop from here.
Okay. Well, I'm glad to hear the analysis because it's kind of what I was leaning towards too, and I'd love to have a little confirmation of kind of the thing that frankly made the most sense. I mean, after the big drop in particular, the kind of short cover pop, along with some potential fundamental catalyst there, is a little different than an obvious fundamental catalyst with lasting power. So we got to get that.
And it's actually a little bit of a wait and see because again, we're in what I'd call an uneasy drop today, right? Okay. I mean, we rallied up.
All right, 15 minutes.
Gap up, and we're in sort of an uneasy drop. It didn't reverse. So this is a theory of mine, right? I'm positing what I think is going to happen, and certainly not seeing follow
back up to
through,
VWAP.
in the intro to the segment.
What do you know?
That's really the key.
All right, great stuff. Thanks, Bob, for the good, concise take here on WTI. Very helpful to our analysis in crude the last several weeks. Bob Ichino, Path Trading Partners. Let's get a little stock update from Jenny Horn, the other half, and Next Gen with our developing story heading into the final trading moments. Netflix still down on the day despite a really good session for stocks. Jenny, what do we blame it on this time?
Okay, so Oliver, this is such a good lesson in like the way that headlines shape the news that we receive, because the first headline I saw did just say that Netflix reported this slower subscriber growth in the UK. So that was the first story we saw that depicted obviously a very negative story. According to these results that were filed late yesterday, Netflix did see a 4% pop in the average number of paid British memberships during 2022. So if that were true, according to The Guardian, that figure represents the lowest subscriber growth in the UK since the service launched back in 2012, and also pales in comparison to the near 20% growth they saw in the recent years historically. So that was the negative news we saw weighed on shares. Shares actually dipped in reaction to that headline. Then I saw the exact same story that read Netflix UK reveals sales rose last year as they gained more high-paying subscribers. So I was like, which is true? As it turns out, they can both be true. So they reported a 12% increase in revenues, with average monthly revenue per paying member rising 14% year over year. The company highlighted this as their revenue continues to grow with a larger membership base that continues to only expand as the company becomes more and more popular overseas. Netflix upped its standard and premium subscriptions last year within the region to now around 11 and 16 euro per month. So they've seen some benefit from that, as we've seen a benefit here in the US. But it's just so interesting to me, the phrasing of that, because they were able to pick out the pieces of the report that Netflix set out back for 2022 and highlight the positive and then highlight the negative. All in all, to me, this says that we're still growing in terms of Netflix's footprint in the UK, and that's really what matters. Although shares have been lower throughout today's session pretty much all day and down 3% here into the close.
All right. Sounds like a new season of, what is the Bridgerton, or The Crown. They need to do one of those to get people back. I can't do a Peaky Blinders thing because I can't do the Peaky Blinders voice without cursing.
You know, I wanted you to try, but I guess that's fair.
I can't
I don't
without
watch
the
any
word
of those.
inserted in between Peaky Blinders. So.
Fair. I get it then. Okay.
Yeah. Okay. Thanks. All right. Netflix still generally up alongside some of the major tech companies over the last several months, but kind of slowing down. Had that epic comeback for the first half of this year, but now maybe they need to keep proving out some of the numbers coming into the earnings. Thanks, Jenny. When we come back, we got our Schwab Big Picture panel talking about the rest of this week, which includes 2 inflation prints
2
and
minutes
a
to
very calm
Fugazi.
market going into them, which stocks are loving right now. Equities are about to
Dude,
close out a good session if they can hold
Today
on
chops
to these
awful.
gains.
Yeah. Look at VWAP kind of coming down. I won't go up to VWAP. VWAP will come to SPY. Okay, I closed the last one on my backup account. One account that actually made money today. Now I'm actually gonna have to go all in on options with this account, trading account. That sucks. Ten seconds to 10 minutes. Rip to VWAP. There's 10 minutes. There's nothing. Nothing. Cut to VWAP and just... That's it. Closing out some more of those. I closed out of the rest. That's review these trades. Someone call my all in. Nice. Okay. So I didn't overtrade today on this account because I was just stuck in the trade most of the day. I called the reversal too early. It just got too far away from me. Too bad. Had the right idea. Just yeah. Well, I didn't take the stop when I knew I should have, and that's because of, again, buying power. Such a bad thing. Mentally, let that make me throw out risk management. Very green on the day overall, though, so thankful for that. Small trading account though just pretty much blew up today though. And it looks like SPY's coming down now. Just a little bit, yeah, whatever. First trade, 10-15, bought one put, and 16 actually. So I mean, I waited for that big portion of the rally. It's just had a lot more to go. Just averaging too soon. Bought one here. Sold one at 10.25. So yeah, I was letting myself stop out there. 10.25. Close it. Bought one more. So then bought back into a put 10.29. Right here. Bought another one. So this is when I started averaging in. Bought another one a few seconds later. Bought another one 10.31. I had 3. And then I was committed. So I should let myself stop out on a break of this. I had channels here. I said this is ready to go long. It was actually this one, I think. But 10.41. Bought some more. Or bought one more. 10.42. Bought another one. 10.43. Bought it. 10.43. I bought 4. Really confident in that one. Not a good idea. And yeah, I remember this channel. I'm like, well, if it breaks here, it could be bullish. I actually got calls, I think, on the other account on this break. I'll check. 43 bought 4 more. 10.54. Yeah. 10.54. Bought 3 more. So 4, 5, 6, 7, 8, 9, 10, 11, 12. So I had 12 puts, dailies, 434 at that point. And I didn't want to close here because that was all my buying power. If I closed here, then I would be done trading with that account today. And I wanted to do well on that account today. So I was stubborn and stupid. Had a nice channel here, nice liquidity built for bulls, nice breakout, and I was holding that. And since I averaged in so quickly, too quickly, I was not able to average in later on in the day, which could have potentially saved it. That said, right here, I was actually green on this account. I was back green. And now it's down 80%. Just from here to here with the daily. I mean, look at this. This is, again, this is pretty unusual as of late to have this kind of price action on SPY in a day. But we got it. Got it today. Just wanted that VWAP. So yeah, that's that account as far as opening. Oh, and then, yeah, closed. Closed 5 at 331. So yeah. Where is that? Yeah. I didn't start closing until here. Should have taken some off. I mean, this happened so fast. It was green just for maybe half a minute. But yeah, when you're down that much for that long, you're given a gift. If you get back to green, you could take it. Don't be greedy. And especially for my case, because I had a big position that was very green on my other account. I should have just closed out of the trading account and just played the other one. Anyways, 331 closed 5, 350 closed 4, just, yeah, and then just closed 3. Yeah, whatever. They're basically all worthless. Let's look at the other account where I'm trading tomorrow's, not dailies, which has some effect. It is a little easier, but that said, I'm not thinking about the buying power, which is I've been able to shake it most days, like find it just okay. That account, I'm done trading for the day. I'm out of buying power. I had to cut losses or whatever. Practice good risk management. Today, for whatever reason, I was forcing my will upon the market, which does not work. All right. So puts. I guess I started with puts on this account. Where are my calls? Oh, I thought I got calls on that break. That's weird. 1024, I got some puts. So started buying puts. I thought that was probably the trade. Once we saw this channel, then taper into this less steep channel, I was like, it's probably gonna happen today. At the very least, to move back down to some supports and do a sideways thing like it did the other day. So, yeah, then I was just waiting for a channel break for more confirmation, but as it's bouncing off this top, this resistance, it's like you can pick up puts in that area. Yeah, anyways, 1022. So I went in pretty heavy on this one. Look at that patience though. Waited till 1022. A break of that channel, so perfect. Thought I had him before then. This. All of them from today? Guess so. That's interesting. I really exercised patience on this account because my other account was so down, and I'm like, I'm not gonna try and time the top and get it before it confirms. So yeah, literally on that candle that break, about 10 at 1022. Yeah, but it wasn't. No. 1222. Yeah. Nice. Bought 10 more. These are tomorrow's 436 puts. 10 more at 1224. So a little bounce there on that candle. 10 more at 1227. Right there. By 30 at that point. And then you know what I did? 1253 right here. I closed all of them for a loss. Closed all of them for a small loss in the channel break up there. Which, of course, hindsight, yeah, okay, I should have just held, but yeah. I was just making double top. Anyways, close them all for a loss. No problem. It wasn't a huge, very small. So from where I closed these to where we opened was, yeah, I mean, it's something. It was 10 cents a contract, so it would have been $300. Reopened all 30 though. Didn't scale in because I was right on that thesis. I just didn't hold long enough. Open them all back up right here. Wow, I waited all the way till here. Interesting. Yeah, I guess I thought that this could still be a bullish channel if it breaks out. Opened up 30 right here, 1056. It's all in that red candle. As it continued to test it, open up 30 there. Then 105, I started selling. There you go, on this candle. Sold 5 at VWAP. Nice gift there. Big sell-off made it easy to hold. And that's literally where we were most of the day then, fortunately. 113 sold 5 more, so down to 20. 131 sold 5 more. Oh yeah, and then I bought 15 on average into it. I thought we were probably gonna keep coming down. Market was not having it. Bought 15 more, so then I was back up to 30 at 147. Right here. About 15 more. 206. Sold. Wait, those are a different strike. Oh yeah, those are 435s I bought. But at 206 of the 435s when I just purchased, I sold 5 at 206. I was trying to just make them free, or I guess just start scaling out of them because I'm like, this seems like it's maybe gonna chop for a bit. So yeah, I didn't like how big my position was. It was too big for the way this was looking. So 206 sold 5 there, small profit. Sold 5 more at 212 for very small profit here. And then sold the last 5. That was the last 5. Yeah, sold the last 5 of the 435s at 216. So right here. So actually was profitable on those as well. But I still had the 436 puts to sell. I just held those through. Sold 5 at 221. Right here. Then I was down to selling one at a time. 223. Sold one. Sold another at 223. Sold one at 230. Right there. Sold one at 249. Oh yeah, on that green candle, that did jump me out. But since I was only selling one at a time, that was much better. And my average wasn't up there. Then 250, I sold another one, so I sold two up there. And then I had one left. Then it came back down. I sold it at 251, so right here. Yeah, the big jumpy candles I didn't like. Oh, I didn't have one left. Never mind, I had more. I had 4 left then. And then I put a trailing stop on 2 of them. That closed out at 252. Yeah, 252. What did that? Wait, what? The order was at 252. When did this close though? When it closed? Oh, 3 o'clock. Yeah, 3 o'clock this closed. Right here. Made that bounce and then it trailed up. So closed 2 there. Closed 1 manually at 321. Wasn't a bad exit. Closed the last one manually at 349. Didn't leave one for the homies this day. I mean, it wouldn't have stopped me out because my bind was way up there. So we're not closed the last one. So good day. Position sizing was very important again today because even though I didn't catch the big move, I had large position sizing for the move that I was pretty confident in. Big move was this morning, which we saw it happening, and I don't know, I just wasn't feeling it, wasn't confident, distracted, whatever it was, but it was this breakout of this channel, little inverse head and shoulders. And then even built up some liquidity and showing that as support. So nice trade to the upside this morning that I did miss. Which would have been, if I had good exits on there, it could have been 200%. Did catch this move. This was it from here to here. And I did way better than I lost from here to there. I didn't lose anything from here to here, but yeah. Confidence in your trades, conviction, and then you can only have that if you have confirmation and you know you're going to have good risk management, you're going to have stop losses, you're not going to just hold and hope. And then you can go in confident, go in heavy, and you can even make up for potentially a loss, which I was down a lot on my other account, of course, because I had all those puts from right here. Went in heavy. Heavy for that account, not heavy for my secondary, which is a bigger account. So yeah, just this move saved that. I haven't even seen what it was today. Let me see. Yeah, so on my trading account down 80%. So tomorrow it's going to be one trade on there for sure. Hopefully it's the right one. Oh, I also actually did a trade on my secondary. So my sorry. Let's see. Okay. So yeah, did pretty well in the backup account. Very pleased with that. Yeah, but trading account is wrecked. So I'll have to try and rebuild that. SPY today. Let's see. Up 0.5%. Brad made a nice move, up 19%. I can't do cover calls on that because yeah, the account that I'm holding the calls in, it doesn't have enough equity. I don't know. It's not large enough, I guess. It should be though, but whatever. We'll see what this thing does. I don't think that's on any news even. So yeah, I'm not sure what's going on with that. AMC, oh, it ended up only up 1%. GME up 3.8. Still below that resistance. Not breaking out yet, so see what the market does. SPY starting to fill that gap. Still very bullish, looking for more dead cat bouncy. Be curious when we get to the top of this trend. If that happens. Yeah, I think that gap fill's probably coming. Tomorrow we have PPI at 8:30 in the morning. And then Waller at 10:15. Bostic speaking at 12:15. And then an FOMC meeting at 2 from September. So I don't think that'll be a catalyst, but definitely the morning CP or PP lie at 8:30. GNS, nice little move still today. They are starting to maybe slow down as it breaks that channel. What else we're looking at? Tish, not great. Not too bad though. GameStop round isn't showing after hours working now. Thanks guys, thanks so much for the support today. Appreciate it all. Maui, again, very generous of you. Very kind. Thank you for that donation today, and thank you guys for your thumbs up. Not bad, not bad. 19 likes in the day, and we're looking good. We'll see you guys. See you on Discord. See you on Twitter. Thanks so much for watching. Sub up, like up, comment down. Happy money sticks around. Yeah, thanks guys. See you